Very good Friday morning to you. It's Non-Farm Friday and Mini Cooper's in the house for it.
Thank you very much for having me, Rich.
It wasn't actually my idea.
Whose was it then?
But Fred kind of twists my arm on a Friday. We get a bit desperate towards the end of the week because, you know, there's not that many people in.
Is that why I'm always doing Fridays?
That's why you're always doing Fridays. Not at all, mate. What am I talking about? I'm talking about the fact that you are dedicated to this, and I really appreciate it. I love when you come in early. You do a lot of work, don't you?
So I come in, well, today I came in half an hour early, and normally every Friday when I'm on the show, I come in half an hour early to see what happened the night before.
Is it lonely at that time?
For half an hour, yeah, but we'd normally come in at 7 in the morning. What? Is that actually a photo? You've got me listening to, you can see I've got my earphones in there doing research on the Bloomberg terminal on Amazon.
This is poor Mini Cooper at 6:30 in the morning.
Look how dark it is.
And how impressive is that, the dedication to the task? I'm so impressed. So it is an absolute joy to have you in the house. You are the fan favourite, sir.
What about Ronnie?
Ronnie, yeah, he's his mother's favourite.
Luckily, Ronnie's on the late shift tonight, so he won't be seeing this unless he's woke up really, really early to watch it live.
Oh no, I think he does. I think he's he. Let us know, Ronnie, in the comments if you are. Now, speaking about those comments, how are you all this morning? Spike is in the house. He says, "Good morning, Mini Cooper."
Morning, morning.
And Spider-Man, Gavin Ackers, the Monkey and Neanderthal neighbour. Monkey Man, I haven't been able to get over since Monday night. I went to see Nina, the ventriloquist. You know, she's got the monkey in her hand. So have you never seen? So it's she's a ventriloquist. She started off with a monkey, so she's on all the TV shows and everything.
Right.
But she got the monkey to say that he was worried about when she passes, he's going to need a new ventriloquist. And she said, "Have you got any preference?" And he said, "Yes, small hands and short nails." So yeah, Monkey Man, I haven't been able to think of you the same since I had a talking monkey at me on Monday evening. Right, what have we got coming up on today's show, Mini Cooper?
So, 8:40 we have trade expectations, and that's with Chris Beecham. And then an hour later at 9:40 we have got live from the trade desk with Erin Bright. And then 25 minutes later at 10:05 we have the week ahead with Izar Batachi.
That's right. It's a good one. We've got the classics in the house.
Classics.
The real classics, yeah. Beachy's a classic. He was a bit stressed yesterday when the Bank of England came out because there was a little bit of misreporting going on by Reuters.
Oh, right? Okay.
Now, potentially you had 8 members of the committee voting for a cut, and you'd have one objection and voting for an increase. Now, Reuters reported it as, no, it's all 9 voting for a cut.
Okay.
But that wasn't actually right, and that was quite misleading because 7 people voted for a cut of 25 basis points and 2 voted for a cut of 50 basis points. So the vote was 7-2, but they all voted for a cut. Okay. So Axel and Chris were going back and forward saying it's 9-0. No, it's 7-2. It's 9-0.
Oh, Beachy.
And well, both of them were right, but the terminology on Reuters was wrong.
Okay.
So we'd never think Beachy was wrong. we know that's never happened in history.
Never.
Monkey Man, have I seen Chris McCausland yet? Now, somebody's going to have to educate me on who Chris McCausland is, sorry. Do we know?
Do I know in the studio?
Fred's going to have a look at it. So, yeah, excuse my ignorance there. McFly's in the house. He's got the finishing flag. The week is almost at already. But what exciting news have we got? Why don't we check overnight action? Because Andrew McKelvey's just dropped my favourite one of the day into the chat.
Let's go.
Of course, it's Chris McCausland. So I, of course, know him as Chris from Strictly, because I was actually betting against him.
It's just someone on Strictly Come Dancing.
Against the blind guy, easy target. So just my father was blind. That's why I know. My father was a terrible dancer, so there was no chance that I could have seen him on Strictly Come Dancing. The most incredible thing I've ever seen is a blind guy being able to learn all the steps. And to be fair, his professional dancer was incredible as well.
Are they more lenient with him on the scoring?
What's that? Sorry.
Because you know how I'm right in saying that there's 4 of them.
The judges, yeah.
And they give a score out of 10. Are they more lenient? Like, do they take that into account? Or
No, not at all. His dance routines were incredible. How the professional dancer got him to, the communication level needed to get to it was, yeah. A good friend of mine actually is the daughter of Arlene Phillips. So the old.
I think I remember because I used to go around my grandparents, and they always. Not that I'm a big fan of Strictly Come Dancing, but they used to love it. It used to come on, I think it was on the BBC on 7 o'clock. I used to watch it with my nan.
Ah, nice. Very nice.
Craig was like the harsh one, I think, and Len with the 7.
Len, yeah, that's right.
That's right,
7. Yeah. That's exactly what I would give you out of 10, actually, for your performance.
7. Bloody hell.
A big 7. 7.
Big 7's the same as a normal 7, though.
Good stuff. Right, Minnie, what have you been looking at? Because the most exciting thing to me this morning is legal in general. As Andrew McKelvey says, spinning off their US division, protection business.
Yep.
And they're announcing a 1 billion sterling buyback once it gets done, completed. At the moment, the market cap's 14.5 billion. So it's about 6% of the market cap. Now, okay, that's nothing like Vodafone, it's not
Your
quite the same standard. But legal in general trading on an 8.3% dividend yield already.
That's very good.
8.3 dividend plus you're doing a buyback, and they obviously believe in the dividend.
I mean, I'd say the average FTSE dividend yield is more like closer to 2-3%, I'd say.
I think for the FTSE 100, about 3.3. Well,
okay.
It went up so much yesterday, it's probably been affected by it.
Also, impressive how you knew that off the top of your head. I was just having a guess.
Good stuff. Right. What else do we have to look at this morning? Because there were a few US numbers last night, weren't there?
Yeah. So I did some research on Amazon. Was the main one. Would you like to talk about that now before the UK Open, or?
Yeah, you cover the Amazon results.
Cool. So I've got Amazon and Eli Lilly. So Amazon. So of course they reported last night, better than expected on revenue and profit for Q4, but the stock
Big but coming.
Yeah, but the stock actually dipped due to the outlook for this quarter. So they said expected revenue for the current quarter to be between 151 and 155.5 billion dollars, lower than the 158.56 billion which analysts were expecting. So as a result, it was slightly down.
That's
last
a
night.
big myth. When you're talking about those kind of numbers, a stock at all-time highs.
Yeah.
If that was a UK stock, it would be down 10-15%. So yeah, 151 to 155 billion of guidance, and that's for revenue. So this is a real miss. It's not like they're just being a little bit cautious, or the upper end is to be fair, the upper end on their operating income is 18, between 14 and 18 operating income. The estimate's 18.3.
Yeah, I mean traditionally, I'd think that for Amazon that they wouldn't have a good quarter this quarter as they would for last quarter due to the fact you've got the Christmas period, and obviously Amazon are very, very big on the e-commerce side of things.
Yep, true. But let's have a look at the stock. That's not a stock that you want to miss numbers. or at least a weak guidance.
And had a great 2024, as we can see there.
So it started off 2024 at 150, and now 13 months later we're talking 230. I'm selling calls in that all day long this afternoon. Because that is, I took my risk down a lot on Tasty yesterday, because it's been a great January, and yesterday I hit my highs of the P&L, and it's always the big question at that stage. Chart off, thanks guys. At that stage, you almost feel like there must be a bit of luck involved, and you're breaking out on the P&L charts. What do? Do you try and ride your luck and get a bit greedy, or do you pull the reins in a bit? It's tricky, isn't it?
I'd say, I mean, my personal view on Amazon is, well, in their previous reporting, so not this one, the time before, they announced good results, right? And Amazon have a huge share in the e-commerce market in the US.
Yeah,
it's 40% of the overall market, which is very, very impressive. So they've got the Amazon Web Services. In addition to that, they've got Amazon Prime, which from memory has around 200 million subscribers, which is very, very, very impressive.
It really is, isn't it?
I believe they can really utilise that with respect to the advertising side, because they have huge influence there with their brand. So I mean, with Amazon for this year, I'm actually quite bullish. And of course, you look at the price chart there, they did have an amazing 2024, like most of the other tech stocks, to be fair. But yeah, we'll see. Also, did you see in the news the other day how if you watch Amazon Prime, Netflix, all these subscription services, you may have to pay the BBC license, which I think is now £178. Because when I was at uni, it was like 147 or something.
Are you saying that you don't pay the mighty BBC license?
I don't now, because I don't watch the BBC. I just watch Netflix, really.
I'm gonna come over there and I'm gonna put the BBC on your screen, so
you're gonna post letters through my door.
Yeah. Do you get letters through your door?
I don't, but I did at uni.
And did they catch you? Has anybody ever had the van come around and somebody knock on the door?
I don't believe they can legally come into your house. But we had a TV at uni, but we only used to play FIFA on it, really.
The old story was that they can knock on your door, and if you open the door, then they can come in. But if you don't, you say, "Who is it?" It's a TV license man. But yeah, I mean, come on, you're a respectable member of the community now, apart from the skinhead. It's time to sit up and pay your taxes.
To be fair, I'm missing out on one thing. Strictly Come Dancing is funded by the BBC, right?
It is.
So you'd be missing out on that.
Oh yeah, I'm very happy to pay my BBC license.
Maybe it's just me.
Right, Blake Sivan, good morning, chaps. Do we think that Vodafone has bottomed out? Let's see how many they bought back yesterday, because there's only one reason it's bottomed out, and that's because of the gigantic buyback that Goldman Sachs are currently taking place. So let's see how many they bought back yesterday. Another 27 million. I hadn't actually looked at this. So we've now had 3 days running of between 27 and 28 million. They can't keep that up, right? Because they've got to buy back 480 million euros worth. Somebody do the math on this. 480 million euros by May the 7th, I believe.
Right, so them doing 28 million a day is obviously not sustainable till May the 7th.
Well, 28 million shares.
Oh,
remember, it's at 66
Sorry.
pence.
Okay.
I'm going to do the math on that in a break. But yeah, somebody work out to May the 7th, if you're buying every market day, 27 million shares, how much do you end up spending in euros? Because as soon as they slow that down, then, okay, it's going to stop moving. But clearly, either the CFO or Goldman's have decided that this stock is at the wrong price, down 66, 67, 68. It's had a proper bounce now from 65.5 to, let's see exactly what that bounce has been. Coming into the 30-minute chart. Look at that. That is the power of a buyback. And Ronnie keeps on arguing against me. But when you've got something of that size buying back shares, 25% of volume every day, it's only gone one way.
I don't know if it's because Ronnie actually thinks that, or he just wants to wind you up.
Yeah, it's fair. It's fair. And he's got me. What is he? He lives rent free in my head. That's the phrase, isn't it? Right. So yeah, that's the mighty Vodafone. Legal in general. Let's have a look at this story because I'm excited by this. Admittedly, it's not my wheelhouse, right? Insurance is not the clear sort of my value added. I've never traded in that sector, but here is the story. A new strategic partnership selling the US protection business for $2.3 billion.
Okay.
And there's a 20% interest in the to sell US protection business to them, but to acquire a 20% interest. Don't know what that means. Right, plans 1 billion share buyback post-completion. That's going to complete towards the end of 2025. So yeah, we're not talking about straight away, but
over time.
And to distribute 40% of market cap through dividends and buyback over the next 3 years. What? 40% of its market cap.
It's a lot.
I mean, that's just, it's absolutely huge. So this thing is kicking off so much cash, and the market never gives it a look of day. There is a 7-year chart on Legal in General. I mean, it's have you ever seen a whole load of nothing happen for such a long period of time? So yeah, I got to admit, I'm a sucker for this kind of story.
I suppose if you own the stock, you get good dividends, right?
Well, that's okay. Yeah, no, that's a great point, Minnie. That is a great point. You've had between 6 and 8% come out every year. So adding that dividend back in, it will look a lot better.
I mean, we said the FTSE 100 dividend yield was 3.3%, but that would be greater than what you see in the US. So those firms in the Nasdaq, S&P, Dow, they won't have dividend yields as high as that.
Oh, yeah, nowhere near. Let's have a quick look at the tip ranks there as well.
Yes.
So, as I say, I don't know as much about the actual business as I should, but the people that do know best, like Farouk Hanif from JP Morgan, he thinks there's a 21% upside. Larissa from Barclays thinks that there's 38% upside. And more interest in Morgan Stanley, who's got a hold on the stock. We need to find out what he's thinking. But Goldman's, 256 upside. So that is my pick of the morning there on Legal in General. In a market that's not looking, too great because it was so good yesterday. Let's look at the headlines in the Times today, because not only did we get interest rate cuts, not only do we have the FTSE at all-time highs yesterday, but we also got new oil price high for housing prices this morning. So a huge month-on-month number in the housing market. What are you going to do, Mr. I'm not on the ladder yet?
Well, mortgage rates, I believe, are still quite high, even though interest rates have fallen slightly, just slightly, in the UK.
Big change in that rhetoric yesterday, though.
Yeah.
A lot more dovish.
Yeah, I was doing a bit of research on mortgage rates. Now they have fallen, but not that much. I mean, you still can't get that good of a deal anymore. Like you could, let's say, like 4 or 5 years ago, you could get a really good 5-year fixed rate deal with a really low interest rate. I mean, now you still be looking at like even if you put down like a 20% deposit, more like 4.5%,
So
4.4%.
there is
so it's
one
still
person.
quite a lot.
There's one person on the floor has just fixed 5-year fix for 4.75,
Okay.
and that was before the Bank of England suddenly went very dovish yesterday. And we can have a look at UK government bond yields, the gilts. There's the 10-year now at 4.46 and the 30-year at 5.03. Remember what that 5-year is. Remember what the 30-year hit, just a month ago? Was it a month ago we saw the huge panic in gilts in the 30-year? So yeah, 5.03 there is quite interesting. That's down significantly. Down again this morning. And that's against the US of 10-year now at 4.45. So they're still the same. 4.46, 4.45.
Even though we did see a cut yesterday with the BOE, I can't really see that many more cuts this year. They also came out and were talking about stagflation, which is basically when you've got high inflation.
No, he said I don't use the word stagflation.
No,
but yeah, it was. He was asked about it.
Yeah, it was
right.
basically, high inflation, high unemployment, low economic growth.
Yeah,
But yeah, we'll see.
I'm impressed that you know stagflation. I thought you thought that was a weekend in Latvia.
I had to do it all at university. You see, like all the price graphs and everything for it. Not that I can actually remember the graph now, because I did economics, so I had to remember probably around 200 graphs. It was nuts. Oof. Yeah. But they made sense logically. Mm-hmm. But it's just actually memorizing them and then writing them down in an exam, because it was mainly an exam, not coursework. So you couldn't just get them out of textbook and then put them in. You actually had to understand and explain how it worked.
Was it straight economics that you did?
Yeah.
Was it?
Yeah.
And can we ask the result?
2-1.
2-1.
2-1. Yeah.
Just so the same as Chris Beecham. We found out Beachy got a 2-1 yesterday as well.
66%.
Nice.
Yeah.
Better than mine. I was 60.8.
Still 2-1 though.
Sneaked into the 2-1.
Still a 2-1.
Yeah.
But yeah, 4% off a first. But if I got 69%, that's 1% off a first, then I'd actually be more upset than getting 66%.
I was waiting for the punchline, but I'm glad we didn't go there. Good stuff. Right, so the big question of the day, what's going to come first? Will Mini Cooper get a mortgage or pay his TV license? Which one is going to be in the movement into adulthood? Now, R6 Senna asking, what is happening with SSE? Is that a general question, or is there news out? Because you're scaring me a little bit there. We had numbers earlier this week as they said that profit came in below analyst estimates, and we see them down to, was it £15.60? Did I see there? Yeah, 15.68. Not great, right? Not great. That's did not take part in the fun of the FTSE yesterday. See if I can get that chart. Yeah, we've had a tricky. Not great, is it? Considering what the FTSE has done. Yeah, and I am short puts on these as well. I'm short the £15 puts. So Vodafone, my short puts, Vodafone helped a lot yesterday, but not this thing. I wonder what the legal and general options market's like. Gonna have a look at that early. Right, we are going to take a quick break. I'm going to run over to the trading desk.
Speak to Pete.
And speak to Pete. Pete Ward's in on a Friday.
He's got you a bacon roll, right?
Yeah, right. Don't tease me with this. Monkey Man, I haven't bought the dip in SSE because I'm short those puts already. So that holds me back from doing it. I will take more of a look into that though. But give them a tease of what's coming up after the market open. We'll do the market open, and then what are we going to look at then?
Well, big thing today is NFPs, non-farm payrolls. So that will be the main point of discussion. after the opening bell.
And we're going to do a mini fast markets because we're going to go through all the stocks that have reported this week. And then we're going to have a little look to see if there's any opportunities around. SSE we can include in there.
I also did a little bit of research on Ford and General Motors as well, who reported at the end of Jan, because that's all relates in with the tariffs, so we can get onto that as well.
Brilliant. So we're going to look at that after the break. We're also going to look at Disney. Any other stocks that you'd like us to look at that have reported this week, drop them into the chat. We'll see you in 3 minutes because I need to run to the trading floor.
Rise and shine with IG's new morning show,
Trade Live with IG.
covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Right, we're back. We've got about 90 seconds now. I've got my orders in. What else have we got this morning on upgrades, downgrades? It's normally Friday's a bit more quiet, upgrades, downgrades, isn't it? So we've got Munters raised to buy at Berenberg.
Okay.
You a fan there? We've got Siemens Health. Didn't even know that existed. It's a real quiet morning on the upgrade downgrade. Wizz Air raised to buy at HSBC. Now, Wizz Air was up 13% yesterday. Bit of an interesting one. There's a new basket in town, which is the Ukraine ceasefire basket. If you want to have a quick look, we got 20 seconds. UBS Ukraine ceasefire basket. Andrew McKelvey, it doesn't have for Expo in there, but it does have all of the following. I managed to get this from Derek Banks, good old Del boy that was a big part of my career at Credit Suisse. He's now at Berenberg. He let me know what was in that basket. We were chatting about it this morning. So there you go, ones to watch, especially over in Poland. Are we ready for the opening bell? Mini Cooper, you got 5 seconds. Time to open the London Stock Exchange, Star. You can see there's a big clock on the screen, yeah?
I'll tell you what it is for the people at home. Normally what happens is someone in the studio would tell me to ring it at a certain time, and I've done it wrong in the past. I don't know how I've done it wrong, but I've done it wrong. So I was waiting for that, so I didn't want to get it wrong again.
What? Take responsibility. We're trying to grow you into an adult. Pay your TV license and know when to ring your own bell.
No, but we've got this collaboration. Learn fast together, right? One of IG's values.
Oh, that's it. Go on. Name them.
Learn fast together, raise a bar,
Champion the client.
There you go.
Very good.
And that's my favourite one, champion the client.
That absolutely. And you are very good at it as well, my friend.
Thank you.
Right, Woos. Oh, AstraZeneca down 1.7. What's happened there? Have they been downgraded? That is a strange one. They were very strong yesterday, so just giving back a little bit of that. Canal Plus, the one of the stocks didn't come to the party yesterday because it wasn't in any index. So yeah, Boise saying 3 seconds late there, Minnie. Keep working on it. JD Sports 70. Do we have Legal & General? I doubt they're open yet because my orders probably put them into an extended auction. So nothing. Producer Fred's going to check for me on Legal & General. And we've got L'Oreal. Now, L'Oreal missed numbers, down 3.8%. Are they worth it, Mini Cooper?
L'Oreal. I'm no expert on L'Oreal, but I can...
Why doesn't that surprise me?
But I was going to say, I can see Porsche there, I can see Volkswagen there. In the red, I can talk a bit about that. But unfortunately, on L'Oreal, I'm no expert.
So L'Oreal missing revenue forecast, the slowdown in China and North America, you know, not like they're two of the most important markets. Sorry, do we have a blurry screen? Is that... Let's zoom in especially for you for the UK. No trade yet on Legal & General. So we expect that at 8:05 for Legal & General opening. We're seeing Aberdeen up 1%, Halfords up 50 basis points, Sainsbury's, but a lot more lackadaisical than yesterday because the FTSE given up some of its gains, unfortunately. Marks & Spencer, there is a story there that you may be a little bit worried about because Richard Price is leaving. He was the man who turned around the fashion in Marks & Spencer's, and he's leaving. Do we know why? So he said he's leaving to pursue a portfolio career and step away from full-time exec life.
Okay.
That's not great, is it? Not great. So Marks & Spencer's hit by that this morning, £3.52, only down 30 basis points. I would have thought it was worth a little bit more than that, actually, that negative story. Crossing into what you were discussing there in Europe, which were the stocks that jumped out to you?
I said Porsche and Volkswagen, but also we've got Adidas there as well.
Go on then.
So with Porsche and Volkswagen, I mean, in the latter part of 2023, they reported. And one thing with a lot of the car makers, including the ones from the US as well, which I can talk about later today with General Motors and Ford, which I can talk about, is that in China, where initially there was a very, very big market, you've got local competitors there who are taking a lot more of that market, which has meant firms such as Porsche, such as Volkswagen, Volkswagen more so than Porsche, haven't done as well in China. But we've also seen that in the US with, let's say, General Motors, with Ford and Tesla, who haven't done as well in China because of the local competitors there. Now, of course, China is a very, very big market, particularly given the number of people that live there.
Absolutely. God, breaking news there. Look at the share price of Volkswagen. It has been in a bit of recovery mode this year, hasn't it? That's quite interesting. So it's moved from 80 euros to 94 already this year. I actually didn't realize that. Right, 1 minute until Legal and General opens. Let's look at that. I will reveal my orders for the opening auction. We have, it's going to uncross in about, any time now it's going to uncross. I've got 3,000 to buy at market, 3,000 to buy with a 52 limit, and 3,000 to buy with a 48 limit. So 9,000 shares in total. 65, Jesus. Oh, wow, that's far away. So I own 3,000 shares. That's the problem with going in at market, is that you can get them anywhere. 65 is maybe a little bit high there, I must admit. But I've got more in to buy at 52. So if they get down there, oh dear. Where do we want to? Where is what is the right price? I want to be in at 58. I think I'll put some in there. But that is 8%. That's a lot, isn't it, Mini Cooper? That is a lot.
Just one thing there, you said about a market order. Just for the viewers out there, you can do market, you can do limit, you can do stop orders. So market order would be the best available price. Limit order would be at a better price, so to buy at lower or sell at a higher. And the stop order would be a worse price.
So you can see
you have those options.
There, 260.2. I'm going to put a limit to buy another 3,000. So 260.2. I'll get those. 259. Yeah, 250. God, it is dropping, isn't it? Come on, let's just buy them at 258.70. There we go. Right, another 3,000 bought at 259. That's the problem with putting a limit order in, Mini Cooper.
Very true.
You've got no control over the price. The market can hit you on the uncrossing. So, but when you want in, that's the problem.
That is the case in market order.
That's the worry. It means that you're definitely involved, and it probably uncrossed in a good million shares. I'm sure my 3,000 shares wasn't pushing it. Right, where are we seeing the FTSE? The FTSE 8,719, down 22 basis points. We've got copper strong again, up 1%. Now trading near 9,400 or $453, nearly 454. The DAX all-time highs yesterday.
Yeah, I saw that.
My trade on the old MDAX is still, it's actually starting to pay off now. So I was short DAX, long MDAX, which is of course the mid caps in Germany, isn't it, Mini Cooper? But let's have a look at that over the 2-hour chart. You can see we were offside for a little bit during the woes of the tariffs, but now going strong. So let me see, I've got 50 shares bought at 215, 50 shares bought at 213.5. Is it time to short some DAX again against this, to turn it back into a pair? Tricky.
Yeah, it's difficult with the DAX. I mean, not many people, let's say 5-6 months back, would have projected that DAX would be reaching all-time highs now, right?
Yeah, and that's it. But you see, Volkswagen up 20% on the year already kind of explains why, or 18% at least.
Very good, though. Very good. 18% on the year.
Yeah. Considering there hasn't really been any good news around it, has there? Let's be honest.
No, not particularly. With all the tariffs, it's just not good. It's just not good for the car makers in general.
Yeah. Now, Lloyd's trying to break out. Let's have a look at this. This is another one I'm involved in at the moment. You can see, if we actually No, we need to go into the daily to get these charts. My goodness. Miri, please do me a favor and speak to people and get the big tails taken out when a chart shouldn't have a tail in it. There we go. Very interesting levels for for Lloyd, sorry. So you've got 63. It's right there, isn't it? In the in where we're looking at for a breakout, because this one I'm not sure if that's real. So therefore we're looking at 63.47, which is right there. Oh, do I add to the position or do I wait till it breaks out? Axel would say wait till it actually breaks out, wouldn't it?
I'd trust Axel.
I'd trust Axel as well. But I'll tell you what, let's put an alert on. So price level alert, we're looking at 63.65. I'm going to put that one and breakout. A lot of catch up for Lloyd's to be done.
Yeah, a lot of the UK banks did well last year due to the fact that interest rates here in the UK were still pretty high. And of course, they would benefit from net interest income. So not just Lloyd's, Barclays, NatWest. So yeah, they all did pretty well last year.
Good. Right. Yeah, Neil pointing out that German GDP is flat now. What was that? That's Vodafone up 1% again. Cool, that's almost too much.
You really do love Vodafone, Rich.
I must admit, I'm surprised that's up 1% again today. But I tell you what's very interesting is that's two sets of numbers now that have been relatively poor. Right, this was the one back in November. And do you see that dropped? And the next day and the next few days, it rallied.
Yeah.
Right? We've had exactly the same this time. We've had a 7% drop, and then it's rallied back to exactly where it was before those numbers. I am going to let just a little bit go there because I am size long Vodafone at the moment. And I think that might be just a little bit too much. If somebody had said you can sell shares at 68.80, if somebody had told me that on Tuesday when the profit warning came out, I would have bitten their hand off because we traded 64.70 we traded. So huge bounce back for Vodafone. I'm just going to hedge some of my options position there because I'm long, got about 400,000 shares from being short puts in Vodafone. So being a little bit disciplined there, Mini Cooper.
I'd like to see it.
Right. Oh, I want to add to these legals. This is one that let's go to the 1 minute chart here. You can see it opened way too high. That was bad discipline for me, putting a market order in. But, you know, if you own legals, you go, wow, this is amazing. Up 7%, take the money. I would imagine that's what we've seen in it so far. But do we see analyst upgrades for the next 4 or 5 days as they start to put the numbers together in that 40% return to shareholders over 3 years? Right?
A lot.
That's even more than Vodafone.
Yeah, a lot.
So what does this one do during the day? Andrew McKelvey, interested to hear your opinion on that as well. We know 8% was a little bit too high for the uncrossing, but where do we see this one trade back to on the day as we move forward? We're just about to cover Germany. German GDP numbers this morning. The trade balance was better than expected in Germany. A little bit of a surprise. And that was on top of inline manufacturing yesterday. But the industrial output was weak this morning. So.
Well, DAX is still at all-time highs, so.
Yeah. Yeah. Maybe we knock out that little bit of DAX against the MDAX as well. Because who knows what can happen this weekend? Who knows?
Anything can happen.
Right, I'm going to sell a little bit of DAX just to even up the MDAX trade there back to a hedge trade. Mini Cooper, what is happening this Sunday?
This Sunday?
In sporting world, television world.
I don't watch that much TV anymore. So I watch a bit of Netflix.
There's something that happens. Oh yeah, you don't have a TV license. No wonder you don't know about. So Sunday going into Monday morning, Sunday night at 11 p.m. Is there anything exciting going on?
To do with TV?
What sporting event on television comes at 11 p.m. on a Sunday night in February every year?
This may be completely wrong. I want to say Super Bowl.
You nailed it. Well done, my man. Very clever. That's right. And do we know who's going to be at the Super Bowl?
I assume very famous artists.
Very famous artists. All the most important people in America will be there.
Oh, actually, this is just giving me like a little throwback. I remember reading, I think it was the other night, now it's all coming back, Trump was going to be the first president to attend, right?
It's like those memes when, all the chemicals going on and boom.
Like earlier, we were talking about how I got like a flashback when we were talking about stagflation to like the price graph in the break. I was just walking along here and it just came to me like inflation, unemployment, how they both go up. I don't know where it came from. But yeah, same thing just happened there.
So what we know is that Trump is busy all day Sunday. Is he going to be tweeting about any tariffs this weekend? I think not. I am taking a punt that all he cares about this weekend is being down in New Orleans, enjoying his Saturday evening, having some incredible food down there as they have, and then he's at the Super Bowl all day Sunday, where he will want to be applauded, cheered, be there for the national anthem. He will not want to be causing any controversy.
Not be discussing tariffs.
He won't be discussing tariffs. There'll probably be some good positive news in crypto, just so all the crypto fans can cheer him on Sunday. But yeah, that would be my. I don't think there's as much weekend risk this weekend as there has been the last couple.
Yeah, because
Trump. We'll see that replayed on Monday morning.
Yeah, because Trump, must have been a week back now, for 4 weeks, stopped the tariffs on both Canada and Mexico. I actually believe that was on Monday with Mexico, and it may have been later on Monday evening with Canada, where this was announced. So I would say, let's say maybe a week before when Trump does the next announcement to say if he's then going to put a tariff again back on Canada and Mexico, now the month was up.
Yeah.
Could see some volatility around them.
Yeah. No, I think you're absolutely right. Okay, so that is going in. Monkey Man, you got a great point there. This time next week is Valentine's Day. Now, if you watch back to Sosnoff and the guys on Tasty yesterday, they had a full discussion around Valentine's Day and what it means to somebody like yourself, young, single.
I'm working on the US late shift.
Oh, so you're not going to be in the studio with me?
No.
See, I was hoping you were going to join me for Valentine's Day because my girlfriend's away skiing. She's not even going to be around on Valentine's Day.
Where was your invite?
To go skiing?
Yeah.
Who would carry the show? Who would be here to assist you?
That is very, very true.
Could have done it from the mountains, I guess. But this is the problem. How's your setup for Valentine's Day? You're going to be in the office on Valentine's night.
Now, it's a Friday, so it's late shift. Now, the normal late shift would start at 1:30, but because it's a Friday, we start at 2, up until when we close here at IG, which is 10 p.m. at night on a Friday. So we're doing 2 till 10. Serious dedication.
Do you have any plans afterwards there? Or are you just going to
No.
solo it?
Go to sleep.
Oh, come on. But is that by choice or, we've got...
No.
Go on.
Is
Tell us.
this Beethoven or someone?
Well, no, to carry on. So your Friday night, you're going to be sitting at home
With a candle on my own.
with a
I might get
candle.
takeaway. Or pot noodle. I'm feeling lucky.
Right, on that, we'll be back in 2 minutes for Fast Markets.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back to Fast Markets, the part of the show when we take some of your ideas and we discuss, is there a way to trade them? Is there something in the options market we can do? What's our feeling on those stocks? So we're doing a special today on earnings week this week. What have we got to look at? I'm going to go, I won the toss during the break, so I get to go first. General Motors and Ford.
General Motors and Ford. So I've got some numbers here. Now, Ford reported on the 5th of Feb, and they forecasted weaker earnings growth this year.
Shocking.
And bigger losses, particularly in the electric vehicle space. This year, projected to lose around $5 billion with respect to the electrical vehicle unit.
It's just
unfortunately
absolutely brutal. We've got a chart up on screen for you there, Minnie. So how do you feel about this stock? Because I got to say, if you watch the CEO in the post-results interview, you know this isn't going anywhere.
I mean, I think with Ford and with General Motors as well, it's really heavily dependent upon these tariffs. General Motors more so than Ford, because Ford produce a higher proportion of their cars in the US than General Motors do. So General Motors actually export the most from Mexico to the US due to the fact that it's cheaper labour.
Yeah.
Now, these tariffs, which Trump has put on hold, on Monday, I believe, Monday afternoon with Mexico, where the price of...
but this isn't even just tariffs.
This isn't just
Minnie,
tariffs,
this is dreadful performance. General Motors better than Ford, I must admit.
So you've got the tariffs in the US, but in addition, like I said before, General Motors used to have quite a strong business in China. Now that's all dropped off due to the fact that the manufacturers, the local competitors in China have done better.
Yeah.
But in addition to that, the Chinese economy, ever since COVID, really,
same as the European autos, I guess.
Really, really slowed down.
But isn't it just the whole arena has been decimated? Autos as a whole, we've talked about you buying a TV license or a house. Would you buy a car?
I live in Bermondsey, so I would
never
not,
need one.
I would not buy a car. As well, for people of my age, I'm 25, insurance is just a lot of money.
Yeah, that's it. Insurance is a lot of money. Congestion charge is a lot of money. Petrol's a lot of money.
Yeah. I just don't need one.
But I mean-
I live 1 minute from the tube station,
Yeah.
and I can just get the train to London Bridge and walk here.
What about you guys out in the sticks? Would you be, Monkey Man, I think you're up there in Sheffield, is that right? Would you be buying a new petrol car or a hybrid or an electric car or, okay, my mother's in this situation at the moment because the exhaust pipe fell off the back of the old one because of corrosion. So she's currently, right, do I stick with, do I go on the bus or does she go for a new car? Now, a new car at the moment, you're talking like 10, 12 grand for something that she's going to use 3 times a week.
When you mean a new
probably.
car, do you mean like a 2025 plate? 'Cause if so, I'd say
No.
no because of depreciation reasons.
Like a little 2-door Vauxhall or something like
Yeah,
that.
my suggestion, obviously I'm no expert, would be maybe like 6, 7 years old. So like most depreciation has,
But even then, you're still looking at 8,000 minimum.
I guess, yeah. I mean, I had one car, it was a Ford Fiesta, it cost me like 3 grand.
Yeah.
I was a new driver.
I'm just picturing you driving around with a in the Ford Fiesta.
No.
Right, so Ford, it's interesting. We've got Volkswagen up 20% on the year, and we've got Ford already. General Motors down 6, and we all know what's happened at Tesla so far. So yeah, Monkey Man on the hybrid. That's interesting. So hybrid always pushes me towards looking at Palladium, and Palladium not a great day yesterday. Just this thing can never hold a rally. So if everybody is going more for hybrids, why is this not getting any moves?
I mean, are hybrids that good? Am I right in saying that a lot of hybrids, the charge only lasts like 26, 27 miles, and you have to regularly recharge it, and then it goes back onto...
And it'll be way more than that.
Is it?
Yeah. A plug-in hybrid will give you much more. But anyway, fast markets. Right, let's go. You shout to me.
Let's start with Disney.
Disney, you know what? I'm a little bit worried about this business because not only did they lose 700,000 subscribers, and we've touched on Netflix, we've touched on Amazon this morning, but also the parks disappointed for the second quarter running. Now, if we start to see underperformance from Disney parks in America, and you've got questionable subscriber growth in the part of the business that they've spent so much money on, the TV, then you've really got to get like a Moana 2 out every quarter.
Yes, yeah.
So what I have done is I've actually sold the call spread. I've sold the call spread, the 110, 120. But also at the same time, I don't think it's going down greatly, right? I don't think Disney's about to...
They've got a strong brand, Disney do. Really strong brand.
So I would buy on weakness. So I also shorted the 102 put. So for that, I've taken in about $3, I think. Let me see. No, a little bit more. $3.30, $4.30. Yeah, $3.80 I've taken in for that structure. And I'm quite happy for that because I think the stock is 105 to 110. As we see, go back to the chart there. So yeah, short the put here, and I just think it's going to trade in this kind of range of 108 to 111. Let's see. Right, back to you then. Ooh, Amazon. What would you do? Amazon here down 4% today, Mini Cooper. Start off, guys.
Interesting. We'll see where it opens because Amazon, of course, is an all-session share, so it will open in half an hour at 9 o'clock.
That's right.
I mean, in general,
this is your performance over the past 18 months, and you've just given. Sorry, chart up. and you've just given crap guidance.
I mean, like
Tricky
I said,
to bet against Amazon, isn't it?
It's tricky, yeah. It's tricky to bet against. And if I was to ever bet against Amazon, not that I would be for this year, I wouldn't just do, I wouldn't just go short. I'd probably buy a put, so my risk is limited, and I know that the max I can lose is that premium.
So sorry, on puts you would.
So what I was saying was, if I would have thought Amazon was going to go down, I'm honest, I'm not 100% sure, and I wouldn't really like to just go short, right? Just short Amazon there. What I would do,
it's never worked
it's
in
a bit-
18
it's a
months,
bit-
has it?
It's a bit risky. What I'd actually do is go and buy a put. Okay, so I know the max amount I can lose before I actually place a trade.
Yeah,
what I've
well,
done.
okay. Let's have a quick look. That's not the tasty way, Mini Cooper. Come on, we don't buy options. We net sell, at least net sell. So let's have a look at what we could do on
I'm not making the most of the margin offset.
March. 42 days to expiry there. Oh, clear trade. $1. You get $1 for the March 200s. It's going to open around 218 today. I would just sell a very plain strangle here. I'd short the $200 put, but I don't think we're going higher. So, wow, I can't get $7 for that, surely. That's incredible. Am I going crazy here? Amazon, it's going to open at 229. Is that no? 4%. Yeah, 228, and I can get $7 for the 250s. Because it's like, of course, it hasn't taken account of the overnight move. I'm being stupid. But yeah, that's what I would look at, something along those lines. The 200 puts, which I'll get more for. And all right, let's go to 20 delta, 255. So I would imagine I'll get probably 5 plus 2, maybe about, well, $6.50 I think I'll get for that, which is, pushing on for 2.5%. I would take that. Right, we've got a couple of questions in there, as well as a couple of comments that are making me laugh. Sabia, very good morning to you. Sabia Tumpa, saying that Mini Cooper, you are fantastic. I think that's Sabia's point.
Thank you, Sabia.
And Ape Alley talking about the Jungle Book, aka Meta. So let's look at Meta and Palantir. Palantir was a question that was a little bit higher.
Yeah. So Palantir, they reported the other day after market, very, very good results.
Yes, they were.
Yeah.
Did you see the video of the CEO as well?
I didn't know.
Quite an incredible. I've never seen somebody so proud to be killing people on a conference call before.
God.
America's enemies, albeit, but still, he said, we are helping to America to destroy our enemies. And yes, sometimes that does include killing them. I'm like, well, that's punchy for a conference call. But yeah, he's a very proud man, and of course they are involved in that defense department. And he was also talking about how the stuff that they know that they can't talk about, part of the business. It's a bit like a movie, isn't it?
Yeah.
But it has rallied, and it rallied again yesterday. 111.
Again, last year, Palantir.
What was that, 111?
Palantir had an exceptional year. Prices shot up, which meant, of course, assuming the same number of shares are outstanding would mean that market cap shoots up. Now, we quite recently, in the latter part of last year, offered Palantir on all session shares.
Yes.
Due to the fact that, of course, it's more liquid and that is very popular with our clients. It's one of our most popular traded stocks in the latter part of 2024.
And right, let's have a look. I've really managed to get away with this one. Where's my Palantir? So yes, there we go. So I managed to buy those puts the calls. I was short the $102 calls. I managed to buy them back for $3.20. Is that yesterday, the 5th? No, 2 days ago.
2 days ago.
237 on the open. So buying to close 320. So I sold them about 50 cents, bought them back at 320. Now they'd be worth 11. No, they'd be worth 9. Phew. So I'm not sure if I'll touch Palantir again. I am short a 135 call and an 85 put. So yeah, I think I will be careful playing in that one because it is.
Yeah, it's volatile stock.
That's lethal. The question was, is it too high now? I'm surprised to see it at 111. I'm very surprised to see that.
I mean, a lot of the US stocks, the tech stocks like Palantir, are overvalued at the moment.
Or potentially fully valued.
Yeah.
Or let's see if there's an analyst forecast that's come out higher. Wedbush, or Dan Ives, of course, says they can go to 120. That's why they were up yesterday, because Dan Ives is the god of tech, obviously. But yeah, not a single. Bank of America 125. Okay, so 125 for Bank of America and 120 for Wedbush. Those are 12-month targets. Remember, people, 12-month targets. And, you're talking about the absolute biggest bull in the world on tech can go about another, 8% in 12 months. Better options elsewhere, nearer to home, like Legal & General. Good stuff. Right, we are done. We're done, unfortunately. So we're going to have to look at Ocado and Persimmon another time. Mini Cooper, time to go back to work.
Thank you very much for having me.
It's a pleasure, as always. Have a wonderful weekend with your pot noodle. We'll see you after the break.
Rise and shine with IG's new morning show,
Trade Live with IG.
covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report. that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, trader friends, welcome back to the show. And we are here on Trader Expectations with Chris Beecham. Good morning. How are you, Chris?
Good morning, I'm all right. I can just about see some blue sky from where I am. I think it's blue. It's kind of grey, but it's a better. It's still very wintry out there, isn't it?
It is
It's
very
still very
wintry.
cold.
And when I was running
expected to
across
get
the
colder.
bridge, it was choppy and windy and slightly damp. And I was joking with Monkey Man earlier this morning, saying it's a bit like the markets, out there. Bit
Painful.
choppy.
Do you think we'll ever get a session where we don't involve you, talk about you running across London Bridge, just to make us all feel bad?
It's a real testament to, the multitasking. I've become really good.
There are trains that go across the river. There are trains that, they go across the bridge.
I
You
do,
don't
but
have
I
to get
can
off.
run faster, and those trains in the morning get very, very, very cramped. So I don't like queuing, as you know, and I don't like being in constricted spaces. So yeah, I prefer.
So what's not to like about trains? They're always noted for being empty and no queuing.
Yeah. And my little adventure yesterday, which I won't share in case it scares everyone from taking trains. Back to the markets. Huge day ahead of us. I mean, here we are thinking we've made it to Friday. Trader friends, all of you, wanting to kind of like have that glass of wine. I haven't had one yet this week, so I'm hoping later tonight, this Friday. We've got NFPs, right? That's the big elephant in the room. What are you calling for? Hotter number or less hot?
And it's a family show, so I can't say what NFPs actually stands for, but yeah. I think you're in for a fairly solid number because, of course, now there's a lot this week on about the revisions, and I know it's got the usual bearish crowd all excited because they always get excited about any hope that the market will go down, and it's really interesting because January is often there's some revisions come through. Maybe there's some volatility, but as we were saying to Rich yesterday, you've had 2 weeks where the market has had DeepSeek and tariffs thrown at it, and yet here we are still within touching distance of record highs for the US and the FTSE at record highs and the DAX record highs. What takes this market down? Is it really going to be some middling revisions to January payrolls? I don't know. We'll see. Famous last words.
You're right. It really does feel like markets, have sort of distance themselves from the usual things that take it down. The thing that I'll be looking out for is funnily enough, what happens on Monday. And so my phone, Trader Friends, has been filling up with lots and lots of messages from all my cousins from LA and San Francisco. It's to do with this whole kind of like government staff buyback. Have you seen those stories? Chris?
Yeah.
Some of the more bizarre ones, apparently if you're a government worker that's in this basket, you're told you can actually just email the word resign, hit go, and then get this buyback immediately. Some 40,000 people have been emailed, and I thought I'd fact check this with my cousins overseas because, you have to fact check these things. Who knows what, the Twitter sphere and all that TikTok stuff might give you. And they said, yes, it's probably true. And one of my cousins said that, what might happen is that we're going to have then a rollback or something will happen. And indeed, we have seen that Monday is going to be when there's a hearing on whether or not, a judge will pause Trump's buyout offer for federal workers. So that is all hanging in the balance. So, 40,000, not a small number. If we get a very hot reading or indeed revisions higher, and if this buyout thing goes through, that I think could potentially rock the market more. What do you think?
Maybe. I think it's interesting though that you've got so many people prepared to take this offer with both hands. And again,
These people not need to work.
Well,
I need
but
to
then
work.
it's a sign of the strength of the economy. If you think I could take the payout and now I've got 5 months to find a new job, if you think it's okay, maybe. I mean, these are people on the ground. Surely they're looking already before they leap. Maybe I'm trusting too much the innate sensibility of US government workers. I don't know. But
I mean,
there's
I'm
a
just
sign
working
of
this up
strength in the
for
economy.
for our trader friends to look at this in case you haven't seen the story. But it also apparently everything's been calculated. Some sites like this page say more than 60,000 employees. That's 2.5% of the government's workforce. Some, 2.3 million in total have signed up for the offer as of Thursday. And apparently, it's all been calculated. You even get all the holidays you haven't used up, all neatly calculated and put into your leaving pot as well. I mean, that is something else. And the fact, like you say, that there've been so many that have reportedly signed up already tells you something about the economy.
Yeah. And payrolls may well confirm the strength of that. So it's really interesting. It's also interesting that you get, I don't know why the judge has to take an interest. Maybe it's not the place to discuss it here, but it's a bit like the fact that the last few weeks you've had those judges in the UK saying that ASDA has to pay out extra money to people who've been viewed as paying less. And you've got a point where judges are now determining employment situations and wages, which is, I'm not quite sure it's a road you want to go down. Admittedly, I'm not fully across it, so I don't want to freewheel on that, but it's an interesting discussion, maybe.
Yeah, well,
but yeah, I
yeah.
think
Go on.
the fact you can hand over all these government, say to the government workers, off you go, and they're quite happy to go, is probably just a sign that you have plenty of strength in the US economy.
Neil chiming in saying NFP increase due to post-election certainty. Some others saying that really the figure is likely to confirm still a robust economy over there. I mean we'll see. Speaking of robust economy, the UK. What a week!
What a week! Yes. We had headlines yesterday that said the Prime Minister was thinking of sacking the Chancellor. That was in the Daily
Didn't we have that
Express.
2 weeks ago as well? I feel like we have had that 2 weeks ago.
Well, it was mooted and it was pushed into saying she'd stay until the end of the Parliament. So, yeah, interesting development. But yes, really, really tough times for the Bank of England, of course, because they're having to cut rates probably a touch faster than they'd like to, but they can see the underlying weakness of the economy. And the noted, of course, is the conversion of one of the hawks to the dovish camp, to the dovish caucus, to go from calling for a hike to calling for a 50 basis point cut is a sign that maybe the policymakers just need to get ahead of this. And that in the Eurozone, in the UK, are we headed back towards, I mean, the ECB sources yesterday, sorry to jump central banks, but the ECB sources yesterday were saying, we think we'll have to go below the neutral rate. So are we heading back to, not negative rates, I suggested that yesterday just to be argumentative, but ultra low rates in the Eurozone, because there's nothing else they can do. Can't do QE and the fiscal reforms aren't coming. What can the ECB do? Anyway, back to the Bank of England. I think they are in a bind, and they've got Labour need to do something. And it's interesting you shared that article yesterday about saying we need to build these nuclear plants and these small nuclear reactors because it's the energy that's killing European economies.
Yes,
that's the thing that's killing us. It's the fact that you have energy is too expensive in the US. It's cheap elsewhere.
And the US, they can make it even cheaper as well.
Yeah, exactly. But they can just pump it like there's no tomorrow. Although we forget that we've got North Sea oil and gas. That's the question, though. Go back to the government. If Ed Miliband clearly wasn't seen last week at Rachel Reeves' speech, was he? And he was very quiet when the third runway decision was announced, or the fact they would push for third runway. And we're kind of expecting.
Yes.
He's gone into submarine mode. Is he going to re-emerge and resign?
Yeah.
I don't know.
Interestingly enough, everyone talks about bill, but when the push comes to shove, and we are. Oh yeah. They all go quiet.
But not in my backyard.
Yeah.
Not in my backyard. I don't want the housing estate. We have this in the village. Where they build houses, and we don't want houses because there's no space. Well, okay, but where are you going to put them?
Speaking.
And the next breath, these people will complain about high house prices. So.
Yeah. So there we are, that circle. So those of you asking about nuclear, many of our trader friends who watch the show also have a keen interest in nuclear and uranium-related stocks. This is the story that Chris and I are talking about. Starmer, pledging to build, baby, build. These new nuclear power stations. I mean, it sounds a bit like he's taking a leaf out of Trump's book, right?
It does, yeah.
And pledging these things, and then perhaps rolling back later on once they find out again. The reason why we haven't already built all these nuclear power stations is because there's just so much resistance to it.
Yeah, there is a major problem, and it will be difficult. I think there's a video of Nick Clegg from 2010 from when the coalition government, if you remember that, far back, was new, saying we can't build nuclear power plants now because they won't come online till 2022. Oh well, there we go. Yeah. And here we are now in 2025. Anyway, the interesting fact this morning, talking about nuclear, and of course Rolls-Royce makes them. As of the past 2 weeks, the drop in Nvidia shares means that Rolls-Royce is now doing better over the last 12 months.
Nice. I mean,
than Nvidia.
Rolls-Royce has been on a tear. Every time we talk about Rolls-Royce, let me just show you the chart. Aaron Bright has his smile gets bigger every time Rolls-Royce goes high, because he has a position on Rolls-Royce. I have re-entered not so long ago, because as you can see here. But look at that, you would have done so well if you just plonked all of your savings into Rolls-Royce.
Don't start. We did this yesterday with if you bought AstraZeneca in 2010 and how well you would have done with the dividend. Yeah, it's always obvious with hindsight that you should have. I mean, this is the problem with trading and markets. You can't tell with a position if it's going to go in your favor, how far it's going to go in your favor, how fast it will go in your favor. You don't know. And that's why the risk management, and I don't want to sound like Axel because risk management is his bugbear, and rightly so, but it's the only thing. If you have to put your stop in and you have to leave it, the rest of it, to look after itself.
Yeah.
And I guarantee you there'll be people that have bought Rolls-Royce, say at the beginning of 2023 when it was 90p a share, and sold it maybe in June 2023 when it was £1.60 and thought, well, that's a really good return. I'm pleased with that. And then look what happened next. Yeah. This is hard. And I think we talk a lot about risk management and putting your stop in and making sure you close out your losers. I think it's even harder to just let your winners run. We've been saying it for years. It's really hard to do, and to sort of just sit there and let it carry on. What if it moves back again?
You say that so elegantly. Yeah. I would say it's really hard to remain with your conviction and your thesis and bite on the stick.
Yes.
Like I was doing last Monday.
Yeah, you could sit there and do nothing. It's Jesse Livermore again. He famously said, "It's not my thinking that made my money; it was my sitting tight." It was just sitting there doing nothing and just letting it work, and that's. So it's hard.
So
really,
for those of you that are sitting tight and watching the space, there are still 4 bidders in the race for what could be multi-billion-pound development contracts in this space. Some of these stocks did, let's just show you Rolls-Royce, as Chris mentioned, did have a bit of a blip higher on that news about, UK pledging to open up new sites for mini nuclear power stations. If you think that this is going to be a reality and you are sat in this camp, then Rolls-Royce, Westinghouse, Holtec, GE, Hitachi Nuclear, those are the companies that you want to be taking a position on. Really interesting space. And also GE, especially interesting because they're at the forefront of these mini nuclear reactors, right? And they make them almost mirror-like, and they are conical shape. I don't know whether you've seen them, but they are multi-use. Search for multi-use functions because they've made it so that they can fly them into space, and it can be easily almost like a flat pack type thing. So I find that fascinating. It's all still in the development phase. We had, speaking of development and flat packs, UK house prices. I mean, that's a chink of light.
That was the most terrible segue I've seen in a long time.
I mean, I had a good go.
Handbrake turn. I thought you were going for IKEA at some point, but no, I see where you are with that. UK house prices. Yeah. Yes. And we're helped by the fact that we're cutting rates and more rate cuts likely to come down the line. So very interesting the fact you've got this solidity in UK house prices.
Yeah.
The things that always go up: US stocks, Nvidia, Rolls-Royce,
Here we go, chaps.
UK house prices. Yeah, UK house prices just don't stop going up. So it's good. It's good for mortgage. Look at Lloyd's as well. We were talking about Lloyd's yesterday with Rich ahead of the rate cut. And again, it's at highs again today because it helps to boost the market. So it'd be a very, very encouraging sign, really.
Plus, it offers a really, let's have a look for you. If you go to the fundamentals page, you'll see there offers a decent, 4.5%, not bad dividend yield there as well. It's
4.5 is really good. What's your definition of really good dividend yield? You're damning with faint praise there. 4.5, great, surely.
I mean, I'm saying 4.5%, not bad compared to, like, I've got a but you have to be quite structured with it. So Santander, I did a fixed savings product, but you have to put in £300 per month, and it's a real faff, right? Because it's like over 3 years to get something crazy like 5.6%. I can't remember what it was.
Yeah.
I did it a while ago.
Yeah.
So then shift all your money into another account and then set a monthly direct debit. So yeah, I was just talking about it from that perspective. So that is Santander, people, if you're interested. But as I said, you have to put it in monthly installments. So there is a bit of pain there. Rich also mentioned another savings product through Investec. Not that we're advertising that, but if you're looking for that ahead of the start of the new tax year. House prices. I mean, this I was quite relieved to see, because I think that we have our house builders really beaten down. I mean, if you wanted to look at a sector, just showing you the UK house builders and related watch list. I mean, they've been really beaten down, all of them really. And perhaps now might be the time when they start moving back up with, interest rates coming down. Again, we were watching the reaction together yesterday, and 2 voted for a bigger cut. Do you think we might get more traction on that and bigger cuts ahead, Chris?
I suspected we would, the Bank of England, and I think that could give house builders a bit of a boost, really. Poor old Chris Nicholson is looking at that, because that reported numbers this week, and it's been volatile move to say the least, because it dropped sharply on the numbers and rebounded yesterday on hopes of more rate cuts, obviously. But look at the 5-year chart on them is grim. Look at £5 a share just before COVID, and we've just never really, we recovered in 2021, but it's just lost ground since then. Grim performance really from the sector. So yeah, they must be hoping that we finally get some sort of decent recovery, because movements are just dire really across the board, and it's certainly been great for shareholder destruction, but they're all down. Crest, Railway, Persimmon, Barclay Group, all down massively on the last 5 years. So sideways movement really since the end of 2020.
Yeah, Persimmon as well. Just taking a look at that, because it's had such a horrendous time as well. But I'm hoping, if any of them, Persimmon is one that is likely to move higher, because it's one of the most rate sensitive out of all the house builders there. Really, investors out there wanting to have a position in this place as well. Someone's asking me whether they should look at companies like Landsec, or companies that are further up the chain, if the government is able to release more brown building spaces a lot quicker. Don't know about you, but I'm seeing a lot of pushback on that in our area.
Yeah, it has been that way, I think.
Let's go to Sting first, but we'll be back after this for the All Sessions opening bell. Right. Welcome back. All Sessions almost upon us. We're just about to get there. Any big names that you are watching out for? I mean, Amazon, of course, the big one. Chris?
Oh, I'm sorry. I thought you were carrying on there. Sorry. Oh, seamless. Yeah, Amazon. But okay numbers, but the outlook was grim. And there was an interesting piece in the FT this morning about AI, the big tech names having to spend hundreds of $billions on AI in 2025. And we knew this was going to happen anyway. But it's certainly, this is the question that continues to be at the forefront of everyone's minds with the sector, and it was reignited with DeepSeek AI, although that turns out that was the story was not all it was cracked up to be, unsurprisingly. But $300 billion of spending for these companies, and Amazon is their 100 billion plus investment in infrastructure for the year. That's a lot of effort that's got to pay off somewhere down the line. And this is the way of stock markets to do fantastically well for a long time. And the whole thing about big tech is they make loads of money, they've got fantastic margins. If that starts to eat away, they won't maybe go down, or won't really give back all these gains, but will they be the real leaders? Will have other companies beginning to take over, because that's how the market works.
Right, and we're off with the all sessions right now. Pinterest, one of the biggest gainers, up 21% there. Clean Spark, bear in mind this is a very volatile stock here, up also 7%. NIO up 2.4%. NIO, of course, the premium EV maker that is its USP is it builds these battery change pods. Palantir, Andrew McKelvey, up 1.8% there, and Palo Alto also gaining ground. Some of the retail names out there also having a good day, JD.com, and some of the crypto-related stocks are bouncing back. Let's have a look at some of the losers. There we have Tesla Motors, all sessions down 1.3%. Not a surprise there, given we had some numbers from Tesla recently that alluded to the fact that it might have to raise some of its prices, like the Model X in the US, after it cannibalized its prices in the last year to make up the sales numbers, to boost sales. Some of the others, Peloton also down, Alphabet down slightly, Eli Lilly also down 0.75%, but all looking like a risk on day. Any of those that you like there, Chris? Catch your eye?
Well, it's really, the Tesla is certainly an interesting one. It remains one of the most popular stocks on the platform, and it just continues to really ease off. We're now roughly back to where we were last night. So we're back to the sort of just post-election highs. So all that gain from the end of November right into middle of December given back again, which is the way of things, of course. It was probably a bit silly to think it would carry on at those levels in the short term. So I think this is an interesting one to watch. The dip continues for the time being. I'm not suggesting people buy the dip now. It looked like it was about to rally end of January, and then obviously DeepSeek and tariffs have just given people an excuse to keep selling. But it's one, I think, just to keep in your watches, because it's obviously the trend is there. The rally is still very, very strong. I think you're just seeing, of course, the price you pay for those huge gains from mid-October that took us from 226 to 450, 487. The price you pay is that you have to have this kind of dramatic pullback.
I'm very disappointed. I was hoping you'd put in a driving pun somewhere there. I was waiting for you to say reverse.
I'm off puns for a Friday. So you've got to be good on a Friday. No pun. You have to be good on a Friday. Today.
And speaking of good, it's the Model X in the US that is going to jump from 79,990 to 84,990. So quite a big jump there. So likely to also expected to potentially hit its sales numbers. Let's have a look at Amazon as well, of course. Speaking of which, because we talked about this earlier, Amazon, of course, with Palantir working together to provide AI technology to the military. Let's have a look at Amazon there, down more than 3%. There we are.
Nasty move. Tough move. And it's always the outlook, isn't it? It's the key thing here is it's not really about beating or missing expectations. I think it's more about what is your outlook for the year. Now, it's firmly rallied off the low, so a lot of buyers coming in the latter half of the session after those numbers came out. So it did storm its way back again, and it's clawed its way back overnight. So there's clearly it's not been dented too much in terms of its cash generation powers. But an interesting one to watch. Just tech, just looking at, and this goes back to the point about Rolls-Royce climbing above Nvidia in terms of returns. Just tech has really started to lag. And it's interesting that the leadership of the market maybe is being handed away in the short term, at least, from these stocks, which is probably healthy. for a longer term rally. That you're seeing the broadening out, the gains broadening out, and it's just no longer just buy big tech and anything else.
We're also
and just see what happens.
seeing and watching out for this rotation play, right? I mean, we've seen this come out, the froth come out of tech, but we've seen the FTSE, the DAX climbing. We've seen consumer, beaten down consumer stocks, some of them come back up again. And perhaps the key here will be to see that trend continues into February. Let's just have a quick look at this chart here. The other key thing about Amazon is, the net profit, still 11% margin there. And the fact that it's, subscription, advertising, and its online stores, of course, all still remaining strong there. Of course, is the AWS that everyone's looking at in the cloud space. But the key thing now is I'm finding, and Chris, you correct me if I'm wrong, but even when, the results are strong, markets can sometimes punish the stock, even though the numbers are good, but they're just not good enough, or they weren't fireworks.
No, and I think after the gains you've seen, a lot of these big tech names since November, it just the market just asks, well, what's the next big story here? And maybe Amazon doesn't suffer massively in the short term. Maybe it just consolidates sideways for another extended period. We were talking about it quite a while ago. It had an extended consolidation in April of last year. So they go through these phases. Markets, people forget, don't go up or down. They go up and down, and sometimes they go sideways. And this is the thing. Maybe Amazon just has to consolidate until the market catches up with itself, and then it starts the uptrend reasserts itself. Things don't grow to the sky. They can't keep trending higher indefinitely.
And we are definitely seeing that on the Tech 100, the going up and coming down. It's been stuck in this, mired in this sideways channel since around November last year. And if you're looking for one, if you're a channel trader, this might be one for you, or, certainly to put an option strategy up there. Lots of talk about and interest about developing an inside and out buy sell function here, which one can execute really quickly on the platform. Any questions from the trader friends? In terms of the macro front, do put them here, because we have Aaron Bright coming up next. Chris, have a great weekend and lovely speaking to you. We'll catch up again over Teams, but it's been brilliant having you on. Thanks so much for joining us.
Thank you. See you later.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, welcome back. We are live from Trade Desk with Aaron Bright. Aaron, I was just saying that I'd like a drum set in here because coming into your segment, it's got that, that jingle with the drums.
Yeah, I'd happy to assist with playing if you need a drummer, even though I can't play drums, but I'll give it my best shot.
Amazing. I mean, you're a man of multiple talents. Speaking of which, kickboxing this weekend, is that right?
That is right, yes.
The man with the longest shins. You thought I was going to say something else, didn't you? Shins. No, he's very tall, Aaron. He's very tall. Those of you.
Well, they're meant to be useful, the long shins for it.
Can you give us a brief overview of what happens in your kickboxing class?
Well, it's my first one actually, so I'm gonna find out. I used to do some karate and taekwondo when I was younger, but now my arm's better. After that bicycle accident, mountain biking accident, I thought time to take up martial arts again. Miss doing them, so yeah, kickboxing I decided to choose after some consultation with one of my friends who's been doing it for a while. So he recommended it, said it's a good blend of different things.
Interesting. And tell us a bit about you now have to sort something out later on to get to the kickboxing. I heard you had an accident?
Well, I punctured a tyre, so I need to get that sorted. Got a big nail in it, and I was actually driving last night. I was meant to be going somewhere last night, and my steering wheel was just veering off to one side, and I was like, something's not right. So I looked out the car, and it was a completely flat tyre. So managed to get back home, going about 10 miles an hour.
Yeah.
Yeah, it's due to be fixed at some point today or tomorrow. So
Right, quick fit, do a deal. I think it's 250 quid for a tire tube change. Yeah, but I guess you've got a call out already.
yeah, I've got a guy who I've spoken to who's going to do it for 60 quid. So I'm very happy with that.
Lots of our trader friends here drive. One thing I found out recently is, if you drive a car and the electric steering and all the electrics go down, you only have about 10 seconds of steering before it just stops, which I found quite freaky because, back in the good old day, with the normal cars, you can still steer for a bit, right? Use the momentum to get to a safe space.
Power steering now, or electronic.
Yeah. Speaking of power, I mean, we have got such a huge session coming up. We've got NFPs, got a huge week ahead in terms of US data as well. I believe we've got some retail data coming up. What are going to be the key pivot points for you in terms of, the smart portfolios and what are you watching out for?
Well, I think NFPs is that big one we do tend to look out for. It really does show to an extent the strength of the US economy, which I think is really, really important to determining really the economic outlook. It's one key tranche how we can look at the US economy, the employment and jobs being added and sort of the momentum that the US economy is taking. So that's something obviously we're going to be looking out for. Also, I guess with that being said, it's important to realize that, if we get one out of kilter print or one bizarre print, not the end of the world. We saw that a couple of months ago because of the effect of the hurricane and the storms that affected. So I think it was only about 43,000 jobs were added well below expectations, but that there was, this sort of act of God, I guess you could say, affecting it. So we have to look at a clear, consistent trend to see what the US economy is doing, and that's really going to be important for determining interest rates and the direction of travel for the US economy, and to an extent our tactical asset allocation.
Taking a look at the US dollar basket for you, ahead of that, it is range bound at the moment, struggling to get above that resistance level that you can see here with my perforated yellow line there. We are waiting on that NFP number this afternoon. For those of you, just a reminder, the expectation is that the NFP or the non-farm payrolls rose by 170,000 jobs after recording that hot number of 256,000 jobs in December. Private payrolls, that is also expected to strengthen by 141K compared to 223K in the prior month. But it's going to be the average earnings rather. Like Chris Beecham said earlier, look out for revisions. I am kind of feeling like on the upside rather than down. Of course, Monday, we've got that crazy story that I just spoke to Chris about, waiting on the federal judge outcome on the Trump, what they're calling now in the US, the Trump federal government workers buyback.
Yes, to do with the redundancies.
Yeah, it's like so bizarre. I think the most bizarre thing out of the whole story is that reportedly they've had a huge number of people just typing resign and sending that email through to say, yes, I want to be part of this. I'm kind of thinking like, mate, don't you guys have jobs and families and bills to pay, right?
Yeah, totally. Yeah, I agree.
You can't be that all 40K or whatever, 30K of them have been there working for 20 odd years, and then they've got this big amount to sit on, right? So, it's a really peculiar story, but, as all things Trump related, it's all slightly bizarre.
Yes, we know what he's like when it comes to surprise announcements and interesting speeches.
Also pulling up, speaking of that, the dollar CAD, let's have a look at that. Has this space cooled off for now? We saw that huge move back to that 14311 level after it spiked, of course, on that Monday when we had the announcements. But do you expect any more movement to do with Canada and Mexico?
Well, it's going to be determined on tariffs, and obviously we've seen both the US, Canada and Mexico in this case, come to some form of temporary pause with tariffs. And that's why we've seen the snapback that you've mentioned for USD CAD. So I think it's going to be really important to determine, the outlook is going to be determined by what policy, provisions and guidelines are going to be set between Canada and Mexico, and if they can come to some form of agreement. I think Trump is particularly concerned about, from what he says about illegal immigration from Mexico and drug smuggling from both borders. So we've seen him bolster security, and I think it's going to be a really interesting space to watch in terms of the currencies. And also, I think prospective inflation. If there are high tariffs, obviously the importers will pay them, and many are going to be able to pass on those costs, which is going to see the American consumer worse off potentially. So, an interesting space to watch, and I think it's going to be determined, as I said, by I guess an element of diplomacy between these three nations, whether they can strike a deal, whether they can come to some form of compromise with tariffs, or whether these tariffs are just going to be enacted in full force, which is I think 10% for both.
Yeah, let's working up the chart of the dollar versus the Mexican peso there. So as you can see, it's been a wild ride as well. This is the hourly chart to show you the
I think I've got a few pesos in my drawer actually. Somewhere.
Did you actually manage to use any of them on your trip?
Yeah. Well, this was when I was in Mexico a few years back.
Yeah.
So they also use a peso, but the Argentinian ones, I did. But have I not shown you the picture where I've got a friend of mine paying for a steak, and it cost something like 50,000 pesos?
No,
which
that's why I was asking. Did you actually manage to use them? Because the numbers are so big.
Yeah, so the highest denomination note is 1,000 pesos, which is like 70 pence. So if you pay for something in cash, you've got wads and wads of it, and
Yeah.
it literally looked like some form of illegal transaction going on at this restaurant because he
Yeah.
was just the waiter is, stacking it up with rubber bands
Yeah.
and counting it, and it was very amusing. But luckily, in a lot of places they do accept card.
Yeah.
So I was able to pay with card with Argentinian pesos through my travel card.
I went to Bali and I wanted to treat my parents, whom I hadn't seen for a long time. So I said, I'll pay for your trip as well. And of course, that then meant that my mum, super duper negotiator. I mean, like if we had her in the Gaza Strip, I mean, it'd all be sorted by now, all be sorted. So she negotiated this deal. Like I was like, don't worry about it. Just don't worry about it. We just go, just relax, have fun, right? It's fine. There's a package. It's fine. We just go. It's fine. But she called up and negotiated before we landed in Bali. And the negotiation was, you're going to hack off this amount for my daughter if we pay in cash. What actually happened, Aaron, was I ended up becoming something like a cash mule, because to pay in the Balinese currency, it's like a bit like the Argentinian peso. Like you end up like my rucksack was filled with cash. I'd never had that much paper cash on me.
The denominations of the notes are so low relative to the value.
It's crazy.
Yeah,
You kind of think, why don't you, like central bank, in Indonesia, rakyat means of the people. Why don't you just whack, get rid of the extra zeros and make it easy? But I guess, everyone's used to it there, and they're not going to do it anytime soon. Some of the key things are also out next week. But before we get to that, what did you think of that reading from the Bank of England, the outlook, and also, the fact that house prices, suddenly this Halifax one, anyway, a chink of light for property owners in the UK. And also, I'm just keeping a close eye on these beaten down house builders here. And in fact, I've taken a position on Persimmon because it's the most rate sensitive house builder if one had to choose one.
Yeah. Well, yeah, I think as expected, we saw that 25 basis point cut yesterday. I think there were some votes for a 50, but yeah, we saw the two. So we saw obviously a pretty broad consensus for that 25 basis point cut, and yeah, it came in line with expectations. And look, I think obviously the concerns that I'm seeing with the UK in the inflation space is the service inflation is still upwards of 4%, which is a concern. So not great, but I think there is obviously still scope to cut rates, which is why we saw that 25 basis point cut. And also, I think the outlook for the UK is rather negative, and I think we've seen that through the government policy, which hasn't been the most pro-growth, as I think we've discussed, and other IG people who've come on here have said that they're not too keen on the Chancellor, and I can kind of understand why, given the outlook of the UK economy, based on the fact that the policies aren't the most pro-growth with the NI hike.
Yeah, that's coming in April, right?
Yeah, so it's going to be tight for all sorts of companies across, the huge companies in the UK, all the way to sort of limited companies with a few employees. They're going to have to find some extra cash. And they're going to have, it's going to take away expenditure from capital expenditure and expansion and new employees, and it's going to potentially be layoffs. So not the most positive outlook on that regard. So I think this, interest rate cut, and if we see any future interest rate cuts, will be in a way to supercharge the economy if there is more negativity around it, and if there is scope to cut rates, if there's lower inflation as well.
Many of our trader friends here like trading cable. Just whacking up the chart here for you to show you the reaction that we had. We are, as Aaron was saying, still in a rather, what is the clever term I saw yesterday? Is it like growth alert stance with the UK, given that the UK economy still faces sticky inflation, interest rates that are coming down, but some critics say not fast enough, not enough plans from critics of Rachel Reeves say not enough plans out there to kickstart growth. And of course, there
Yeah.
are these fears about that word that everyone at the Bank of England is worried about saying, and that is stagflation.
Yes, there's a real risk of that, particularly. I don't think that the risk is sort of 70s style, really awful stagflation of sort of 10% and then really negative growth. But definitely we could see inflation creep up above 3-4% if service inflation continues to go up. Potentially tariffs affect the UK, or there's any other increase of costs. And then obviously we've seen that the outlook and the policy is not a growth style, a classic growth style policy that you learn in your first economics lecture at
No,
uni.
it isn't.
No, it's sort of the opposite. So not the most positive outlook. And it's really interesting your point on housemakers, Angeline, because we've seen that the UK property market and pretty much everyone in the UK has a mortgage which is quite short term. So the houses are probably going to get a bump when interest rates are cut because then they can quickly remortgage. It's not like the US where you lock in for 30 years. So there's, people constantly remortgaging. So if they can now get a cheaper, shorter rate mortgage, they might be able to do that, which is why, as you said and showed me that article, that there was a little bump in house prices.
Yeah, that's right. It's always, I've always been gobsmacked by how long the term is in the US. I mean, they're now offering mortgages that are even longer than that, which to me is kind of crazy. And
I was there in 2022 and I was chatting to a guy. I was in Mexico. This is when I was in Mexico, actually. And I was chatting to an American guy by the pool who actually, just complete coincidence, happened to be a financial advisor. And he was telling me he'd just bought a house and locked it in at like COVID rates for 30 years. So whatever. And it was actually when Jerome Powell, I was there when Jerome Powell started hiking, did the 50 basis point hike, and everyone was, selling their US equities. And he said, to me, it's not the end of the world because I've locked in my rate for 30 years. But for rate sensitive people, really, really quite a stressful time.
yeah, and in Japan, it's even further the other way. In fact, they're talking about looking at more longer term mortgages here as house prices continue to rise, whereby you can pass it on to future generations, which I think is also rather bizarre. Some very clever and interesting comments coming from our trader friends, but we'll get to that after this break.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, welcome back, trader friends. Tons of really cool questions coming through. We've got Aaron Dark. We've been teasing him about his light at the back there. It is looking rather dark, but I gather that if you turn on the light, you suddenly go blonde. You have blonde highlights at the top.
Well, more like purple. I'm really not sure why, because it's just a normal yellow light, and it makes my hair go purple. So yeah, that's why I'm slightly. I want to keep my normal haircut so I don't get too many hate comments. So
Nice.
yeah, quite slightly darker.
Yeah. Maybe after this we might have to like send you some lights for the side or something. But yeah, we were teasing him and saying we should change your name to Aaron Dark. Some questions and comments. Thank you so much for putting it in the chat here. RSX, thank you so much for highlighting Affirm. I am pleased that this has finally punched through. Looking to take another position there because I did take my earlier position. Well remembered, RSX, you've got a really good memory. This time last year, I was looking at Affirm. Let's show you the daily chart here because some of my mates at Klarna were hiring. They were hiring like crazy this time last year. Affirm, for those of you that don't know this space, they deal with payment systems and it is moving higher there after some upbeat comments related to its earnings. Also, some questions from James Bennett. Aaron, isn't house prices up due to people rushing to buy ahead of stamp duty changes?
Yeah, it's a really good question, James. I think there's absolutely elements of that because you've got to think of stamp duty as just an additional cost. It's a tax, right? So when there's changes to stamp duty, particularly if there's rises, I mean, we saw it massively throughout 2020, 2021, where the house market in the UK really slid downwards. And we saw various policies from the Conservative government at the time, stamp duty holidays, all things like that, and saw a real boost in the housing market. So yeah, absolutely, there's definitely an element of that.
Didn't your grandmother time something quite well in terms of sales and stamp duty?
Yes, she did.
Oh, good. My memory is still working. Thanks to the coffee that Rich brought me.
It was when she passed away, unfortunately, and we sold the house. And it just happened to be sold at quite a optimal time, just before interest rates were being hiked.
Andrew McKilvey, thank you so much for your comments there. Ange, if you want to look at further up the building chain, yes, I do. Look at HWG. Just punching that up now because this is not one I've come across and traded before. This is Harworth, just putting up the stock there for you. This is a daily chart. It hasn't really done very much recently. Let's have a look at a longer term view. This is the monthly look. Really in a channel there, except for that little tiny spike. What was that all about, Andrew? I am also personally looking at some properties in the Milton Keynes area. Probably a bit too sort of late now, but I was looking a couple of months ago because it sits right in between two very big tech and also university towns, Cambridge and Oxford. So looking at properties there. Any of you have any other ideas? Do let me know in terms of property I'm looking for my next project. Also, Monkey Man saying Visa trending on Twitter in a bet that's US border related. What does that mean? Any idea, Aaron?
Visa. So I'm not sure why that entirely would be that related to the US border. But look, it's obviously a good company. And yeah, it's something that I'll have to do a little bit of research on. I can't give a specific answer to that related to the US border, I'm afraid.
Monkey Man, please enlighten us. Back to Affirm, RSAX, you know, the likes of PayPal are also doing well. But as I said, many of these stocks, if you want a longer term position, Affirm, Klarna, those that are sort of poised at the forefront to benefit from the rise in buy now, pay later, BNPL, especially as they expand in Europe and also in places like Asia. It'd be interesting to see how Asia takes to it, because the whole ethos of Asians is that you don't ever spend what you can't afford now. You don't use tomorrow's money to finance what you need now. But we all know,
I think in America, it's kind of the other way around.
yeah, it's like leverage. Well,
Yeah.
give us as much leverage as possible. So, you know, you could look at this buy now, pay later as shopping leverage, can't you?
Yeah, definitely.
Yeah. And also looking at further down, Donald, very good question there. Just tuning in, is good news actually bad news with today's NFP, as we have seen previously on what is the read ahead of today's numbers. So we've already covered the read ahead, but do you think we're now in that time, Aaron, about good news is bad news, or is bad news still bad news?
Yeah, we could definitely see that for going both ways, but I do agree with that. If we see good news, well, then we're just looking at a slower rate path, a rate cut path, which is not great for investors and traders who have really stoked on the idea that the US is going to supercharge the markets even further with rate cuts. So yeah, absolutely, I sort of completely agree and see where the person's coming from there.
RSAX saying that she took a position on Affirm, but planning to take it off very soon. I totally agree with this. It's very, very volatile. Just showing you the stock here. As I said, my position when I spoke about this time last year was a short-term one, because it is a very volatile stock. So take profit. No one ever became bankrupt taking profits early. Then once you're out, go back in and find that sweet spot again and then come back off. This is not one to sit on. RSAX also saying Cambridge is a good investment, very expensive rent-wise. That is why I'm looking at Milton Keynes further out. My older one is studying there. I need your advice, please, because I need to know from your older one whether people are staying further out and then commuting in, because rents are now so expensive.
They are indeed.
I know, it's great. This is a lovely community because we help each other out here all the time. Some big things also happening this weekend. There's going to be the Super Bowl. Is that something you watch or catch up on?
You're going to be watching Chelsea. Well, and I'm watching Chelsea Brighton on Saturday night because I'm a big Chelsea fan. If there's any Chelsea fans in the comments, let me know.
Nice. I am going to be eating myself silly because it's still Chinese New Year. And so still lots of family to meet and greet, and it's 15 days. So Chinese New Year technically does not end until Wednesday next week.
Oh wow!
Yeah,
I'm sure you're enjoying all the
That's why I
festivities.
have to run across the bridge every morning. Otherwise, I was just like.
I was speaking to someone in the office. The London Bridge walk. He said it's quite miserable in the morning. Everyone's got their head down and focused on work.
Yeah, except for me, because my head is not down. I'm looking up at you.
Yeah, you're charging, getting ready to go live on air.
I am charging. Let's have a look at some of the European indices. Germany 40, pretty much a flat day there. Not much happening across the FTSE and Germany. They tend to move in tandem. That's why a lot of traders like the pair trades. FTSE, just showing that for you because we've had such a big week with the Bank of England as well as the numbers from Halifax on the UK housing sector, widening that out to the daily. FTSE still going strong. As you know, we had all-time highs in the previous session. What do you think, Aaron? Continue to power ahead in the coming week, or do you think we fall back?
Yeah, interesting one. I mean, a lot I think is going to depend on what the UK economy posts and I guess the path of interest rates. But I think it's been really, really impressive. I mean, the UK and continental Europe's been on sale for a while, and I think investment strategists I've been speaking with about particularly the FTSE and the European indices, some of the cheaper ones, they're looking for this sort of catalyst for real growth. And when that comes, you're going to potentially see a reduction in that sort of value premium or discount, I should say, relative to the US indices potentially. But yeah, really impressive so far. We've obviously seen the FTSE 100 outperform the S&P 500, which is rather rare.
And the fact that we're seeing this before NFPs as well, right?
Yeah, and when the outlook for the UK is so abysmal.
Yes, and and Germany too, and the fact that even
Yeah.
the US indices as well. I'm just going to show you the chart here for the US.
Yeah, they're still up around 4%, I think.
Yeah, they are. And given that it's not been so long since Tantrum Monday, Tariff Tantrum Monday, and
Yeah,
DeepSeek Monday from the week prior.
Yeah.
And so, this is like a really strong underlying support for equities is my reading on this. The inability to get dragged down by those events is to me quite a bullish signal.
Yeah, I think so. But I think it's going to be dependent on data going forward. Valuation is definitely a touch stretched in the US on an indices and sort of individual equity level.
Yeah, let's take a look at one of the big power rockets behind the FTSE's rise as well. AstraZeneca, one in the Ange portfolio, pension portfolio here, as you know, because I have sent my portfolio to Aaron for his blessing or not blessing.
You're a very talented investor.
I don't know about that. I'm very good at biting on a stick and then doing something and then going, oh my God, did I do the right thing? As you've seen, as I come over and go, did I do the right thing? Should I do this? And then Aaron quite often giggles at me and says, that's pretty good going. It's beaten that other pension fund that you thought was going great guns. But AstraZeneca going really well, especially since the November period, really coming up this climb. I have a really good feeling because it said that its oncology side of things has done well, and this is of course the FTSE's most valuable company as well. And Rich and I yesterday were watching Astra and some of the other big like GSK, thinking, wow, if they're powering ahead, then it's going to be a great day for the FTSE, right? So it's very important to understand your constituents and understand volume flows, because that gives you a good idea of
it's obviously a market cap weighted index, the FTSE. So yeah, really important to look at the key constituents, just like the S&P 500, same sort of indices, market cap weighted. So that's why you have the Mag 7 really dragging that index.
Yeah. And it has come back, today, but it hasn't come back fully from that meteoric 6.3% rise after its positive outlook. And as I said, the key thing was to see that its oncology, its outlook, its pipeline was able to offset the fading COVID vaccine glow. And all this, of course, also happening as US companies, we continue to see the reporting season continue. Really a mixed bag so far. I mean, Eli Lilly, great. Ford, not so great. What's your reading? I mean, let's just have a look at Amazon as well. Amazon down quite a lot in all sessions. What's your reading of the US earnings season so far?
it's been a mix, as you said. So we've seen some strong earnings from some of the Mag 7, some of the tech companies. But as you said, yeah, some companies have really
Show the chart.
posted some negative figures, or not negative, I should say, but below, I guess, what was expected. So, yeah, I think you do tend to get this with various earnings seasons. You do get companies which really surprise on the upside or deliver, and then others which, don't deliver, or the market punishes them because of a small blight, I guess you could say. You look at Microsoft; they were punished by their I believe it was their cloud business not being as growth orientated as one expected. So, yeah, I mean, obviously, when we're looking at earnings, we're kind of looking at more of a how did the season do afterwards. So we're looking a little bit in hindsight, and what did the earnings show us when we compare it year on year, season on season, quarter on quarter, season on season kind of thing. And yeah, that's what's important for us when constructing long-term portfolios. Obviously for traders and short-term investors, they're sort of looking at those earning seasons to see those bumps or collapses in stock price. But when we're looking at it from sort of a portfolio management perspective, we're looking at it over a sort of a much longer period.
Nice. Some comments coming through. Monkey Man saying, and you mentioned Super Bowl. Him's having a big advert during got to be a good thing. I agree. I am watching this like a hawk because it is going to be a key one for all those GLP-1, your Novo Nordisk, your Eli Lilly. Him and hers as well has been going really well. Look at its shares since early this year. But what's also interesting is him and hers, those of you that have not seen this, I mean, you're starting to see it a bit, aren't you, on the tubes, like in adverts and things, but they're actually bigger in the US, where you see it almost like, on most shelves. They've got a lot of billboard advertising. I feel like in the US, they have still a lot more traditional advertising than they do here. This is the telehealth company. Have you ever used him and hers, Aaron?
No, I don't
Seen
think I
the
have.
adverts? It's starting to hit our. I'll show you what it looks like. Here we are, images. There we are. Have you seen this? They've got very light colors. It looks, yeah. They've got big adverts on the tubes. It's starting
I
to.
haven't seen that actually.
Have you not?
No, I haven't. Is this all various supplements that you can have and?
Yeah, and
Yeah.
they're seen as the rival. Director Phil, you seem to know a lot about this, and about the weight loss telehealth company. Oh, he goes to the gym. Love it. And Aaron goes kickboxing, and I run across the bridge every morning. We have to hit a break, but it'll be interesting to see whether their provocative adverts are going to change the dial as to, if they gain more of the pie, the weight loss pie. Him and hers, thanks to Monkey Man, running their first Super Bowl ad ever, and poised to be apparently one of the biggest talked about ads ever.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome to Market Maze. There's something very funny going on in the studio here because we've got a fire alarm test that is about to happen. So,
it's very loud.
Luckily, we do know it's a test, so we don't have to run out the building screaming, do we, Ange?
No, not yet, anyway.
Right, so we got from futures to ETFs. Today, we're going to look at interest rates and bonds. How do we trade interest rates? Well, the volatility of interest rates has surged recently, with all treasury yields nearing a 20-year high once again. And look at that, the way that it finished last time, back in 2007, we've seen it all before, haven't we, people? So that is the 6-month, the 2-year, the 5-year, and the 10-year, all up and around mid 4%. So this increase in volatility creates more trading opportunities for options traders due to both price extremes and increased IVs. Today, we want to explore the fundamental strategies for trading interest rates and their closely related products, bonds.
Now, trading interest rate futures products is the most intuitive method to track interest rates directly. The four most popular products are the 2-year, 5-year, 10-year and 30-year interest rate futures. They share the same tick size and point value, as you can see there.
So yeah, there's the four products we're going to look at today. These products, futures products, are relatively smaller compared to other futures such as gold and crude. Here are some examples. So if it's a 20 tick change, then your P&L is going to be $20, right? If there's 100 ticks change, $100. So, you know, you're talking about potentially taking bigger size because you've got a fair idea what the moves are going to be. More commonly traded products are those related to bonds. Since interest rates and their corresponding bond products are almost always inversely related, trading both vehicles is essentially the same thing. The only difference is that trading directions are, of course, opposite. The most liquid and popular vehicles are futures and ETFs. The following table shows the most liquid and traded bond futures and ETFs.
Oh, 30-year, 20, the 20-year plus ETFs, TLTs, yep.
It's something we haven't actually covered before, have we, Ange?
No.
The I didn't know, I've never traded the 5-year, and I seldom trade the 30-year.
I think that's most people don't trade the 30-year. It's mostly the 2 and 10s.
Yeah, so but you know, that's going to become more important. If you've never looked into bonds before, if you are used to trading currencies or shares, I would really urge you to take a close look at some of this stuff, because it's going to become really interesting over the next 4 years as you get more and more concerns around the sustainability of debt and debt repayments by the US, potentially in the gilt market here at home. But that 30-year in particular is, of course, when you start to question, will the US be able to pay back their debt over in the next 30 years?
That's right. And as Rich said, it's already, you know, starting to get interesting. We saw a few weeks ago the UK, of course, and then now the 2-year Treasury yields also rising ahead of the NFP report.
Oh yeah.
Yeah.
Could be an interesting one today. And yeah, so IEF, in the ETFs, IEF is that 7 to 10 year. That's a nice little mid-range where you're not in the long end, but also you're going further out than the 2-year. So bond futures are large products and more complex than interest rate products. The tick value and the 1-point value change varies based on the products. Typically, longer term bond futures have a great IV, adjusted notional value, with higher implied vol as well. So you can see now, traditionally, the further out you go, the more volatile the moves, right? So think of it, I don't know, Ange, what's the best example of something that you would kind of shake at a shorthand close to you, and then the further out you go, the more it moves.
Like a wave oscillator.
A wave oscillator, or what was the down in Australia when you shake and it makes the noise?
The rainmaker thing. Oh no, the thing that looks like a board.
Yes, yeah, exactly. You know, it gives a little move there, but then the further out you go, you get much more volatility. That is, think of interest rates like that. So the IVs range from 12.3% on the long end to only 2% on the 2 years, because of course we've got a much stronger grasp of what the Federal Reserve is going to do over the next 6 to 9 months that, you know, really moves that 2-year bond.
And one important note is that unlike all bond futures and futures options, which carry a multiplier of 1,000, the 2-year bond futures carry a multiplier of 2,000. Therefore, a 1-point move in the futures equates to a $2,000 profit or loss, while a 1-point move in other futures equates to $1,000.
Interesting. That's definitely something to take note of, isn't it? Now, ETFs, particularly TLT, are smaller. TLT is the 20-year, are smaller, more liquid and easy to trade. ETFs do not have expiration dates, and traders do not need to deal with rolling or extra management if planning to hold them. So sometimes ETFs can be the way forward. TLT, a good one there to trade, 17% implied vol. Now, bond products are highly correlated. Traders can choose any of these products as long as they are liquid. Pairs trading is also popular, right? So you play that curve. You might want to go, well, what for a curve steepening, you would want to be long the 2-year and short the 10-year, because of course it's the converse move. And there you go, your correlations there. And run us through the takeaways.
So here are the notables. There are 3 main ways to trade interest rates and related products, including interest rate futures, and bond ETFs. Interest rates and bond prices are inversely related, while bond prices themselves are highly positively correlated. Interest rate futures, like the 10-year, are significantly smaller than their bond futures counterparts, such as ZN. ETFs, extremely liquid and suitable for all types of traders.
Wonderful. So it's that time on a Friday where I get to head down for a coffee.
You're going to escape the.
I'm going to escape the fire alarm.
The fire alarm is so loud, and then you then have to be evacuated really quickly.
That's right. Have a wonderful non-farm Friday. My guess is higher. Once again, it's going to start with a 2. 208,000 I'm going for. Remembering I won last time.
I know, but you won your own prize.
I won my own Greg's voucher. Brilliant.
You should get the Greg's voucher because you complained about the ketchup.
We've given it to Vanetta now. Vanetta owns the Greg's voucher.
Nice.
What's your guess?
Yeah.
170 expected. Right.
Do they have Greg's there?
No, 170 expected non-farms. What's your guess?
Oh, okay. I'm going to go hot again. You went for 208, is that right?
Yeah, you're going to go 209, aren't you?
No, I'm not. I'm going to go 210.
Very good. Have a wonderful weekend, everybody. Joining and in 2.5 minutes is Isar. Run you through what's going on next week. Best luck. Have a great weekend.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, trader friends, we are having these NFP guesses coming in hard and fast.
Yeah, what are
Monkey Man
people guessing?
168, Monkey Man
168.
168, Ian Holmes 185 there. Richie Rich was, I believe it was 208. I went to 10.
Yeah.
Hot.
So my controversial guess is actually not at all to do with the US economy.
Okay.
So in Jan, the Jan jobs data is total garbage data because it's so seasonally adjusted that actually the real number is like essentially a random number generator. So if it's going to be a random number generator, it's as likely to be low as it is high. So I'm going to go for like 145.
Number generator.
Random number generator. It just randomly, they basically, because it's all relative to like the last 7 Januaries, and in all Januaries you have huge seasonal adjustments. So my guess would probably be like 145. It could either be 200 or 145. But last week, I was so outraged.
Last week, you mean the last NFP?
The last NFP.
The last
sorry,
NFP.
the last NFP number. I went for a hot number because economy was booming, lots of people getting jobs. In fact, I specifically chose the number Rich had plus a couple of grand.
Nice.
And literally, he's outrageously said that he won the guess, which I think is not true.
The
he got the Greg's voucher.
He got his own present.
Yeah, I know, and I didn't get the Greg's voucher. Outrageous. Outrageous.
You were robbed.
I was robbed.
I remember messaging you going, I think you were the highest on the chat.
Yeah, because I intentionally chose the highest number. Oh, it's funny. Anyway.
So just give me your number now. So we have it logged, people. We have it logged.
So
Ian Holmes 185. You are?
Yeah, but I'm like 150.
150. There we are. We have logged it. And Ange is 210.
You like you super hot. Yeah.
I'm super hot because of these messages I've been getting from my cousins in San Francisco. And I was looking at them and asking my cousins in LA, can I help? So when your mum is 1 of 10, that means, and your dad is 1 of 5, and you have about 31 first cousins and growing.
Yeah, you've got like good intel.
Yeah, spread across.
I think fundamentally, right, like the next couple of jobs reads are really important because now we're starting to see some of the inflation risks emerge. And so then the flip side of that mandate is really important. We saw some of the changes in the Fed statement in the last Fed meeting. They made the decision to make some of those changes, but then in the press conference, Powell kind of downplayed those changes. So even on like one of the major changes they made in the statement was previously they said that inflation was kind of making progress towards the 2% target, but was still elevated. And they actually removed that whole first bit to just say inflation remained elevated. And so while the Fed is looking at this really closely and rates are quite sensitive, my honest view is that the jobs data is going to be like market moving and kind of critical. I think the interesting data today that I'm looking for is actually not the headline Jan jobs number, it's the revisions to all of the 2024 numbers, because I think ultimately revisions have been really material in the past. We've seen some really major revisions and the market is looking to see if in particular, there are adjustments to do with the birth-death model. So this is getting a little bit into the weeds, but the way that
birth-death model.
Yeah, exactly. Yeah. So this is.
I love it when it starts here. You always learn something new.
This is like truly in the weeds of the labor numbers, but basically, it's not births and deaths of people; it's births and deaths of companies. So the way the BLS does all of their data is largely through surveys, and so the surveys are about kind of calling up companies and calling up employers and working out like what are they saying in terms of whether they're hiring more people or they're laying off people, or if people in households are being hired or laid off. And they apply all of that survey data through a series of assumption lenses that they use to adjust that number. Like the most obvious one that I think makes sense is the seasonal adjustments. So during certain times of the year, you hire, and certain times of the year, you lay off, especially seasonal workers. And so a good example of that is in the run up to Christmas, they tend to hire lots of people, especially in retail. And then in January and December, that shrinks, and that's why the Jan number that we're about to see is going to be a very volatile number. And so it could go up, it could go down, but that's actually mostly because of the seasonal changes. And because we had hot December data and hot November data, that maybe indicates we had more seasonal workers. And so then I would expect to see this number a bit lower in Jan.
We're going to go to the macro chart in just a bit, but before we get there, I'll tell you my thinking behind the hot number.
Yeah.
My thinking is that, just whack up my screen here, the whole federal judge pausing the Trump federal worker buyout. Have you seen that story?
I did see that, yeah.
The key thing for me here is the fact that everywhere you look, and I've fact checked this.
Yeah.
So I'm actually calling my cousins in LA, San Francisco, going, is this real? And they go on the ground, speaking to people and what they know. Yes, it's real. The fact that actually some thousands, and apparently 40K, depending on where you get your information from, have said, yes, we want to be in this pot. We want to take advantage of this federal buyout.
Yeah.
To then just resign.
I think they would still sit on payroll for 8 months because of the way that the buyout is working.
Yeah, but my point is, if you have that confidence.
Oh, in the job market.
Yeah, if you have that confidence, I'm thinking like, wow, do you not have bills to pay?
It's a tricky
I have
one.
tons of, like, I always challenge anyone when they say, oh, I feel so sad, no one knows that I'm alive. I'm telling you, if I miss one of my payments, I guarantee you my bank will remind me they know I'm alive, right?
Yeah.
And if these people can, even if they sit on payroll, but they're kind of like logged down.
8 months? I think 8 months pay is quite generous, actually.
Well, if they all get 8 months, I mean.
Yeah, which I know
right?
for some of the issues in like Twitter, for example, some people weren't paid their full payout, and then it's gone to judges.
Yeah,
so just to go back to the birth-death model, and the reason I think the revisions are really important today is, so one of the assumptions that they apply all this survey data through is an assumption about how many new companies are created, which are the kind of births, and how many of the existing companies are going bankrupt, i.e. the death of companies. And so they apply these kind of quite big assumptions about births and deaths that might shift the amount of of what they would expect employment to be. And since COVID, that model has been really broken because COVID itself had like a really, really abnormal amount of births and deaths. And so it led to a massively skewed data set. And actually what we saw is almost 4 months ago or 3 months ago, when there was the last major revision, we actually had changes of almost 1 million jobs just because of this one assumption being different. And so I'm really kind of today looking under the hood of some of these jobs numbers to see what are the revisions that are being made, rather than just what is the headline print for NFP for January. There's actually a question in the chat which was about providing a link to the Stanford study that we spoke about in the psychology section.
I love it. I've just punched up the link there. RSAC's asking for the link, and also here it is on my screen. After Issa spoke about it, I actually did I'm on the right page, aren't I?
Yeah. And if you click products, you
we
can
are.
have a look at the different products they have available.
Yeah.
But if you go to, on the left, SPARQ tools.
Yeah. Here we are. RSAC's walking you through it. Yeah.
There's some stuff on stress and managing stress. So you can kind of search there. There's a whole bunch. If you go to the toolkits or collections, there's rethinking stress. Yeah, if you click that one, that has a bunch of training on how you can think about a stress enhances performance mindset, which is what we spoke about earlier this week, which I think was in the context of some of the volatile news events that we're talking about. And I think if we kind of go slightly back to the kind of economic calendar, I think next week is going to continue to be a big week for macro.
Yeah.
So we've got the job stuff today. We also have today. I'm also looking
macro
at
calendar for you as I was talking about it.
Yeah, so I think there's job stuff today, which is like a really big deal. But if we look even further ahead, if we look at the US, on Wednesday you've got CPI. I think CPI has been market moving historically. I actually think this month is likely to be in line with consensus. So I'm not too worried about a very hot print, but there is some risk of that. And I think there's some risk of the market responding badly to inflation being persistently elevated. I think you've got UK data in particular on GDP, which I think is going to be really interesting because the Bank of England just revised down its GDP forecasts. So they went from, in their last press conference, they had a kind of 1.5% growth reading revised down to a 0.7% growth reading. So seeing where GDP kind of ends up coming out will be a really useful indicator in terms of data. I think the Bank of England has probably had some insight into what that GDP data will look like. And so my gut feel is probably that GDP data is going to come in slightly more muted than expected. And then finally, looking ahead to Friday, we have retail sales. I think retail sales are a great indicator of the strength of the consumer in the US. And I think that, to me, the consumer has been a total juggernaut.
It has been.
Through lots of periods of uncertainty.
Yeah.
And I am now looking to work out,
just carrying through and just spending despite, any kind of headwinds.
Yeah, and it would be interesting to start to look, post-Christmas, post that busy period, how is the consumer looking, and what is the state of discretionary spending? So I think that's those are the major events I'm looking out for the next week. I mean, last week we got the call on tariffs being a big market mover, correct, which I think was great. I think this week, to me, I am looking at a bit more of the macro lens on what are some of the data drops that are coming out, how is the market going to respond?
What's the underlying?
Yeah, exactly. It's less of the surface level noise and more of the what's bubbling on a bit under the surface.
Yeah, this is a great time for that midway point because I have a present for you.
Oh, yeah?
So the tariff tantrum, and then we had the
And then the aggressive V return.
Yeah,
it's every Monday has been a full-on Monday.
So this is a psychology thing now. I am actually starting to get nervous about Sunday night.
Yeah.
This is
It's funny, they talk about reinforced learning and the degree to which you build up muscle memory.
Yeah.
And it turns out it only takes 3, 4, 5 times
It does.
for your body to be fully ready for the same thing to happen again. We've already had 2 weekends in a row where there's been big news that happened on weekends and markets responded in an extreme way on Monday and then came back on Wednesday. And so I think we're all starting to build that muscle memory.
And Tasty's JJ says you need to go through something 11 times before mine's it's shorter than that, I think, 3 twice. So when you were talking to us about that wonderful segment where you showed us the Stanford Spark thing about managing stress.
Yeah.
I told you about the rock trick or the pebble.
Yeah. What was the rock trick?
So
you said you would show me. Oh, you have a rock.
So hold it.
Yeah. Okay.
So those of you there also, this is very, very useful. And you feel the rock. There are smooth edges.
Yeah.
But there are also rough edges. And it's really, really sort of...
So we spoke about behavioral activation.
Exactly.
It's this idea of taking sensory input.
Yeah, and when you get whacked by a trade, I was telling people who got whacked with AMD, I was like, oh, Diageo, I got whacked by Diageo.
And you also felt your rock.
I felt my rock, and it's grounding, and you know that you have to take the rough with the smooth.
Nice. It feels a little bit like, it's a while ago now, but do you remember the movie Inception? Where everyone has their totem, of, a thing that they know what it feels like.
Yeah, exactly.
I think there's an element of that is ritualistic, and an element of that is also mindful.
Yeah.
Both of which actually can be quite helpful.
Yeah. And on that note, let's go on to the some of the culprits that we're looking out for. Here we are.
So I think, week ahead, I think is actually a slightly quieter week for earnings in general, especially after some of the big tech that we've had this week. And I think especially when we look at Nvidia and some of the big bank names that are coming down the horizon. But I think I'm looking at a couple of specific names. I'm looking at McDonald's on Monday, before market opens in the US, first thing. So McDonald's is expected to see an actual decline in EPS, but an increase in revenue. Either way, those changes are relatively muted. But I think what I'm looking for is two things, which is number one, how has the consumer responded to the fact that McDonald's has actually increased some of its prices? And we had the initial kind of upset around some of their prices going up. And then actually we saw a relaunch of the equivalent of their dollar menu. McDonald's has been playing around with pricing much more than they have historically. And I kind of want to look to see how is that impacting consumer behavior. I think that's important for McDonald's itself, but it's also important more generally on how sensitive we're getting towards prices. Because I think we've all been through this kind of inflationary bout. And so everyone is a bit hypersensitized to stuff. And McDonald's has a bunch of input costs. Like, I don't know if you've seen the price of eggs recently, but in the US,
oh my goodness, I know they're saying that your easy over, breakfast might become a something for luxury.
It's crazy how much eggs cost now in the US, and that's impacted by a whole bunch of things like avian flu and like just general tightness in the supply of chickens and eggs. So I'm looking both at the cost side and on the revenue side, how much price sensitivity is there. And the second thing I'm looking for is McDonald's is a good example of a company that is a good manifestation of consumer discretionary spend. I think while it is a cheap place to eat relatively, I actually think it kind of cuts across class lines a lot more than a lot of other kind of providers.
Yes,
so
McDonald's has the Nike effect.
Yeah, exactly.
And so very few stocks have the Nike effect, where you can reach out to the really, really super rich, but the mid-tier, but also the low, without brand deterioration.
Yeah.
Right? It's a really, really hard thing to do.
Yeah, and they're very stable in terms of the quality of the product that they offer. There was like a funny story many, many years ago about Usain Bolt. Before he ran the 100 meters world record time, he didn't want to eat anything that might risk him feeling unwell, and so he ate McDonald's chicken nuggets.
Yeah.
And I think I am looking at McDonald's as a stock, and given its kind of recent performance, I don't know if you want to pull up the chart.
Yeah.
But I think I am looking at the data and looking at how consumers respond, because I think it's going to be a really interesting next release.
Are you bullish or bearish?
On McDonald's.
Yeah.
So if you pull up the stock, it's had a pretty good run.
I am bearish.
And it's been kind of consolidating and stabilizing. You're bearish. Do you mind walking me through what the thesis is there?
Trader friends, tell us if you're bullish or bearish.
Because it's kind of consolidating at a level that has been, you can see in previous waves where it's gone up, it's kind of stabilized around the same level.
Yeah, but I am bearish because I just do not have conviction in the companies at the moment. It hasn't shown how it's going to surf the GLP-1 wave.
Yeah.
And if you look at the analyst reports over the last 18 months, the words that come up in question time, Q&A for companies like McDonald's, like the Burger Kings,
Yeah, it's Ozempic,
Wegovy, what are you doing, to try and stop the ebb and flow of this, which is going to really start curbing the appetites for things like McDonald's. So we're seeing, we're talking about Super Bowl, Hims and Hers, that telehealth company that is now amassing so much money they can advertise, be the biggest, ad provider there.
Yeah.
The other thing is obesity rates are skyrocketing, as we know. And all these companies that are producing stuff that are high calorie, if they're not...
Well, it's also food that is like kind of typically thought of as a bit addictive.
Yes, yes.
I think, so with McDonald's, I agree with you longer term. I actually think the GLP-1 trend is bad for them on a kind of 10+ year time horizon. I think shorter term, I'm going to use a power word here. I'm going to be data dependent. So I'm going to have a look at these earnings.
Oh, you and JP.
Yeah, I know, right? I'm going to have a look at these earnings, and I'm going to look how sensitive are the consumer to price changes? How much is McDonald's able to kind of like pass on some of the cost pressures that they're facing at the moment, especially on some of their breakfast items? How much are we seeing the impact of China, for example, on their kind of top line? And so I think, based on that, I'll try and make an assessment. I think
you're right. The pricing is very clever, and they have been trying all sorts of things that $1 meal. Do you remember when they brought out McArch? Do you remember that?
Yeah,
And then it swiftly died.
Yeah, and like actually, they have a very, very localized strategy. So McDonald's in Switzerland looks and feels very different. They have like a McCafe offer that is a much more premium offer, and so yeah, like I think I am in a position where honestly, it could go either way depending on how the consumer is responding. But I could see a bullish case for McDonald's actually.
I'm short-term bearish.
Yeah.
That's just my...
Interesting. I mean, let's see what the earnings are. I'm actually really interested in. I think it's one of the ones I'm looking out for. We had a couple of other stocks actually on the list.
Let's
for
hit
next
them up.
week. So if we pull back up that slide, we had one of the big ones is Unilever.
Yeah.
So I know a lot of our traders actually love trading Unilever.
Oh, they do. It's also, a good sort of consumer stock.
Yeah.
It's got, just putting up the chart here, it's got, dividend yield of 3.1%.
It's been a kind of steady, reliable player in the market.
It's like a good, what I call a, complementary portfolio,
Yeah, especially if you've got quite a volatile portfolio, it's quite a nice, like, stable, well, it's quite a nice, stable alternative. I also think it's a bit of in general, a bit of a defensive play. And so if you're worried about some of the volatility that we're seeing, it might be quite a reasonable play to have. I particularly like players like Unilever in a kind of pairs trade situation, where if I have a volatile name that I'm a bit worried about, I might short that volatile name and go long a name like Unilever. And all that matters is I'm exposed to the difference between those two names.
Yeah.
And so that's one way I often think about these slightly more defensive plays. At the same time, Unilever is exposed to the consumer. And so I think to me, this is another example of some of that consumer discretionary spend. Like, what are we actually seeing? We're seeing players like Dollar General, players like B&M in the UK, really getting beaten up over the last kind of couple of years. I don't know if you want to pull up the Dollar General stock, but actually that is a good example to me of where low-end consumer discretionary has been hammered. Like it's been a really brutal time. And so actually I look at a player like Unilever and I think maybe there's a bit of upside if we were to kind of see that momentum start to change. But maybe not. And so I think it's another good example where like I'm looking at the data of the earnings. I'm not having a big position going into those earnings, but I'm looking to see what is the data telling us about the position of companies like this.
And Unilever, it's interesting that it has had quite a bit of pain, but it is, trying to get itself pivoting like many of its competitors away from, food, to the higher margin products like your face creams, your personal care products.
And I think they have benefited a little bit from some of the currency changes that a lot of the major players right in the UK have benefited from.
Yeah.
And so actually even when you look at their chart, it's quite hard to distinguish between exchange rate effects and the underlying.
Right, let's go to banks now because we only have 2 minutes before the fire
So
alarm goes off.
Weirdly, this year, or this quarter at least, the UK banks have split their earnings over multiple weeks as opposed to what used to be the case, which is we had one big banking week. So this week we've got Barclays and NatWest.
Yeah.
I think I'll be looking a little bit at the effective interest rates, and the other thing I'll be looking at for the UK is, given our slightly weaker growth, what are the provisions they're going to keep for credit losses? So those are the two bits of data for those two banks that I'm looking out for.
Okay, let's take a look at my chart. I've got Barclays up here. Barclays really been doing very well. I mean, it's been on a tear, really.
That's crazy.
And from January this year, it's had that another big leap there. And
look at the volumes as well. It's been increasing, not on small volumes.
Yeah. And I like the fact that it's also very strong. If you widen it out, a strong uptrend since February, January 2024.
And look, it had been stuck in that kind of like twilight zone for years.
Yeah. 1 more minute to go. Should we have a quick look at NatWest? Another one that is well traded here on the IG platform. Also seeing a similar trajectory there.
Yeah.
Got 45 seconds. Let's quickly whack up the chart, people. Here we are. And
enough of NatWest. I am not taking this slander trying to steal my ESAR non-farm payroll 190. Do we have clarification? We've got max at 175. What was my guess? I'm gonna go 206.
Oh,
And what was it?
outrageous. Wait,
To finish the
was
week.
it in the chat? If it's not in the chat, it's not real.
It was in the chat. There you go. You saw 190.
Outrageous. Okay.
Right, we've got 30 seconds to the
I
fire
will
alarm.
admit that you got it correct. What are you guessing? What are you guessing today?
Today was, what was my guess?
You were
139.
139. 139? No way.
taking the piss because he's taking your number.
Sneaky.
Right, I'm heading out because we got a fire alarm. Have a great weekend.
Right.
Thanks, everyone.
See you soon. Have a good weekend, everyone.
Amazon earnings are out, and they're not that good. It is Thursday, February 6th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, Ilya Spivak in San Francisco. To take you through this hour as we wrap up the trading day, if you're on YouTube, come over to the platform. Tell us what you think of these Amazon earnings, or rather, trade the Amazon earnings on the platform. Come over to the chat and tell us what you think of them and how they're trading right now. Gentlemen, 227 here in the after hours. Just a quick brief update on that Amazon. Earnings per share are much better than expected at 186 versus 150. The net sales, 187.79 billion versus an estimate of 187.32 billion. However, Amazon Web Service net sales, 28.79 billion versus an estimated 28.82 billion, and they are guiding for their first quarter net sales in the range of 151 to 155.5, whereas the street estimate ahead of time was 158.64 billion. So a miss on guidance here. The stock is down after hours. The NASDAQ futures take a hit. The S&P 500 futures ultimately take a hit, which were trading up near 6105 or so before the release. Net, though, when we take a step back and we look at the markets here today, what kind of day was this today? We really didn't do anything.
Nothing.
The market that grinds sideways in the S&P. The NASDAQ's a touch warmer. Dow, Russell, a touch softer. Yields are twisting across the curve as the ramifications, perhaps, of what Scott Bessent, the Treasury Secretary, said regarding the Trump administration's targeting, for lack of a better phrase, of the 10-year yield. We see that gold and silver have a day where they pull back and then rally by the end of the session. Oil continues to break down, and in the world of currencies, did the Bank of England just make a policy mistake? The British pound down today, but off the lows. Guys, let's go right into this because this is an abbreviated edition of Overtime here at the bottom of the hour. The prediction trade is back this Thursday. Myself, Jeff Joseph, sitting down with John Rothschild. He wrote the book on how to handicap sports betting, particularly for football. It was a very interesting conversation. If you're interested in the Super Bowl, go check it out. It's going to be here right after Overtime at 4:30 Eastern, 3:30 Central. Intro done. Ilya, it's the day before non-farm payrolls. All was quiet in the house, even the mouse. What do we take out of today's equity index? Lack of anything.
I think what we take out is that economic data matters once again, because when we got those ISM numbers yesterday and those PMI numbers, that's where things got moving. And the important thing here from a Fed perspective is that Fed policy expectations have done absolutely nothing for weeks. That's through the DeepSeek fiasco, through the tariffs that were here and then not here, through the Fed policy announcement itself. Fed policy expectations, as the markets see them, baked into Fed funds futures, they've been stable. And that tells us the markets are speculating perhaps on something else. The curve has also flattened significantly as the front end has held, because those expectations have held, but the long end has significantly moved, especially, of course, yesterday on those ISM and PMI numbers, which were much, much weaker and, of course, very worrying in an environment where the U.S. service sector is the only thing powering the global economy. Not just the U.S. economy, the global economy. And when the news is that you've hit a 12-month low on U.S. growth and it's the cooling in the service sector doing it, and new orders are down, and all of the things that you might expect at the beginning of a downturn, and that's the driver, Well, you're probably going to expect lower yields downwind, which is exactly what we've seen in the bond market at the longer end without the front end moving. So this makes for a really interesting setup for non-farm payrolls. It ultimately doesn't need to do a whole lot but unlock the markets to keep doing what they're doing. The PMI numbers told us that employment actually was relatively stable. That wasn't why the aggregates were low. But we also know that employment is relatively lagging. When new orders are down, but employment is stable, you sort of look downwind and go, well, if new orders are right, then employment will catch up on the downside. That's where the pain comes last. So when you look at these numbers, you sort of wonder what the markets will take of them. If they come out relatively in line with expectations, which has been generally the tendency for U.S. economic data recently, you sort of look at it and say, all right, well, if the PMIs are right, then there is no impetus here for the Fed to change course near term, but downwind, you probably still have economic weakness as a building risk. And that ends up being higher bonds and maybe stocks that start to trade differently than they have been. They've been so sensitive to Fed policy odds. Maybe now they actually start to trade recession risk.
Dylan, Amazon misses a little bit, obviously a bit of a disappointment, but the longer term picture here is of a company that remains at the center point or close to the focal point of this next stage AI revolution. With Amazon trading in around 230 right now, it's bouncing back a little bit here after hours. Is this a stock, if you see a discount here, would you be willing to buy in at this point?
For sure. Absolutely. Absolutely. I mean, but I say that because I don't own the stock. I mean, I own Meta as a stock for but not from a trading perspective. Like I own Meta to own it.
Sure.
And I would love to own Amazon to own it. And so I would look at any sort of meaningful price declines as a way to own it, a moment to own it. For I think all the sort of blatantly obvious reasons.
If only to contextualize, what Amazon's doing here, there was a company that had its earnings yesterday, rather this morning, that we've mentioned as part of our, phase 2 AI basket that we've been watching, IQVIA Holdings. They are a medical company that does clinical trials and uses AI to help speed up diagnoses. They had a very good earnings report today where the share price hit a high of 220. This is the kind of company that's going to rely on Amazon Web Services to continue to scale their business up as they offer those application level AI agentics to their consumers, if it's business to business or in this case, patients. They're already seeing some results and a bottoming here, a downtrend that's breaking. If companies like IQV are starting to see and realize the potential of AI in their own business, then weakness that we see in AWS, is that really something to be too worried about? I personally don't think so. I will be looking to buy the dip on Amazon tomorrow morning. I'd like to see where we settle out.
You're doing that as an investment, though, or you're doing that as a trade?
Oh, as a trade. I mean, look, if we couldn't get knocked down by DeepSeek and we rebounded right away from DeepSeek and we had the trade war and we rebound right away from the trade war headlines, the reality is those are the big macro wins. And in the short term is what matters right now, then we still have a clear path higher for stocks, at least as far as I'm concerned. But I am beginning to get worried. Not because I think the economy is sliding, not because I think that the economy is going to fall off into a recession anytime soon. But it is worth thinking about how some of these policies could actually impact growth. We were talking about this briefly on Futures Power Hour today, thinking about the non-farm payrolls report. Most of the expansion in the U.S. labor market over the past few years has been because of an influx of foreign-born workers. And those foreign-born workers, they haven't been displacing Americans. In fact, the natural-born population workforce unemployment rate is lower than the foreign workforce unemployment rate right now. But the fact is that we've seen millions of people come in over the past few years. We're now ramping up deportations. One observation that a number of economists have made, including those at the Federal Reserve, has been that absent the flow of immigration into this country, you may actually see net zero jobs growth altogether. The companies or the industries that have been feigning the most concern over a potential shift in immigration policy have been those in hospitality, food sector, right? Not a surprise there. In agriculture. I bring all that up to say that if we go into a world where we take away labor market growth, and then all of a sudden you're looking at all this aggregate demand taken out of the economy, you're probably facing down a bit of an economic slowdown moving forward, regardless of if the tariffs are put into place here, Ilya. So I'm not ready to lay out any bear trades just yet. I'd like to see something like XRT, for example. Goldman Sachs research has put out studies showing that if you're trying to prepare for a recession, XRT typically is the most sensitive sector ETF, to articulate that point of view. And it's not like this is screaming to the downside here. It's a weak day up by 0.19%, but generally speaking, this is a chart that has been moving bottom left to top right over the past few years. And so arbitrarily trying to say like this is the top, we need something more right now. But as the policy begins to crystallize and you see what these shifts could mean, there is a certain amount of math that needs to make this work. If we cut government spending, we reduce the size of the workforce, where does the actual GDP growth come from? And if that GDP growth isn't there, what do corporate earnings look like? What's the Fed path look like? Yada, yada, yada. So not at that threshold yet. Maybe soon. Tomorrow's non-farm payrolls, though, Ilya, it is economic data. It does matter. 170K expected versus the prior reading, obviously north of, I think it was 256.
256, that's right.
The unemployment rate is due to stay on hold at 4.1%. Wages doing at 3.8% year over year from 3.9. What makes the state of the labor market so remarkable here is that we don't really need that many jobs in order to keep the unemployment rate on a path to stay below 4.5% by the end of this year. According to the Atlanta Fed jobs calculator, we need 57.1 thousand jobs per month through 2025 to achieve that. So my question to you is, at 170K, is that the kind of number that produces the economy's overheating type of reaction, or is that the Goldilocks, not too hot, not too cold kind of result?
I don't think that a reading too far from expectations looks likely based on the way that economic data has evolved, nor do I think that's the market moving component here. I don't think the markets are going to meaningfully react to the substance of the number, because that would imply that near-term Fed policy expectations are in flux. And all the evidence seems to suggest that they're not. I mean, look at the difference between the way the 2-year has behaved really since, let's call it early November, late November, give or take, of last year. It's gone nowhere. It's been in a tight range between about the low 102s and the low 103s. Nothing's going on. The markets are not actively speculating on how much the Fed is going to move this year. They're happily sitting at a slightly more hawkish reading than the Fed for next year, and nothing's really going anywhere because the Fed is loudly saying, we are not in a hurry. This is a year for us to watch data for the most part. We'll tinker here and there a little. So the markets are, I don't think, going to be that reactive to the substance of the number. I think they're going to, unless, of course, it's some wild surprise. I think what the numbers are going to be catalyzing is the intent that markets have, but for the presence of this event risk. So once the event risk is out of the way and the markets don't have their baseline disrupted, I think they go on. And
I mean, isn't the risk at this point, Ilya, that the number's much weaker when you consider the other sort of, mild indications of slowness?
Yeah.
If the labor market shows some meaningful weakness, would that not validate some of the other data earlier this week and maybe escalate concerns? I just feel like the risk in this jobs number is that it's a bad number.
Yes. Yes, I think this is actually an environment with Fed policy expectations, at least in the near term, as anchored as they are, and yields starting to really crack lower. I think especially at the long end, of course, I think the key thing here might be that, once again, bad is bad on economic data and good is good.
That's what I was thinking.
which is different than what we'd seen, let's say, over the past several months, where it was like, okay, more cuts, good, fewer cuts, bad. The reflation idea was starting to kind of invert on the markets. It didn't really bother them, to Chris's point, made over and over, which I agree with. From mid-September to basically the beginning of December, the markets didn't really care that Fed rate cuts were falling out of the outlook. What they started to care in December is you started to approach that line in the sand at only one cut. And by mid-January, when you got to one cut being baked in, that's when the markets went, whoa, okay, hold on, wait a second. No, bad. And there you start to see things turn. So the markets are seemingly benchmarked at that line now. Now it looks like we're betting on longer term rates. And after yesterday's data, longer term rates very much told us we're expecting cheaper credit downwind. That's an expectation of some degree of weakness. And given that it happened with fairly shocking service sector data, it seems like bad is bad, good is good. We're trading downwind recession risk, not the near-term Fed at this point.
Dylan, this weekend, obviously, we may be facing some more, weekend gap risk. This is our last show of the week, so we're not going to be able to talk tomorrow. I was talking with Sosnoff about this morning. He actually thinks that the odds of a significant gap lower this weekend, for the third weekend in a row, would be quite low. If only because we're going through this desensitization to some of the, daily tweeting and news conferences, but also because Trump's going to be tied up at the Super Bowl on Sunday. He's the first president, I think, to actually go to a Super Bowl. So it's going to be a little bit of a scene. So maybe he's not going to be talking about tariffs before the market opens up. When you think about just general risk, is there another environment that we've been in like this where we almost have to throw away the entire framework that we operated in for the past few years? Or is that just what 2016 was?
Yeah, I actually think economic data is more important. I think that the Trump show is less relevant than anybody thinks. I don't think that the Trump show is actually that relevant. Trump is an entertainer. And so he drives great joy from wildly provocative daily commentary, very little of which will he ever actually implement. And so I actually think that the economic data, I think the risk is that people become excessively preoccupied with the president of the United States and the president's, reality show, and to the detriment of, Amazon earnings, the jobs number, and ISM numbers. So I actually think that, but I also think that the market is has pretty quickly adjusted to that.
Ilya, we can go around the markets here before we wrap this up in about 10 minutes time. The biggest place of interest outside of what was happening in stocks and bonds today, probably in the metals. Gold prices take a little bit of a step back. They dunk down into the 2850s before rebounding. 2876.70 here at the close. After hours up another few bucks, $3 there. Silver, same type of price action. You had a steep pullback early in the day. We recover back above that 1 week moving average. And copper prices, they traded up, they traded down, and ultimately they settle higher here. What's your read on the metals market as we go into non-farm payrolls and this coming weekend? Is $2,900 an ounce the new high? Is that the new ceiling for gold?
I certainly hope not, but I do hope that we get more of a pullback. I kind of missed the boat on getting long this when the opportunity presented itself. The breakout happened actually earlier in spot gold than it did in the front month futures contract. And typically I look at spot as this kind of an early indicator, because you oftentimes get the true impetus of the price action before the futures reflect it for sort of carry cost calculation reasons and sort of the slight differences in the way futures are setup in the pricing than is the spot. So you can sometimes see the spot front run the futures in terms of technical confirmation, this way or that. And so I'm kind of hoping for a number out of NFP that's about in line with expectations, and that gives a little bit of relief, perhaps, in doing that on yields. Yields come back a little bit to sort of suggest the Fed doesn't need to be in a hurry, and sort of takes a little bit of that event risk out of the equation, and that lets gold come back in some, because I think we're looking at a bullish breakout, and the bullish breakout probably targets somewhere around the 3,000 mark as its next major inflection point. I'd just like to be let in at a better value.
Dylan, I know that you haven't come into the cornering of the silver market with your single futures contract or call anytime recently.
I'm ready. I got a hair trigger. I'm ready. Given the
locked and loaded.
You know, I saw a comment a few days ago.
I keep the account funded and liquid, baby. I'm ready to move.
I saw a good comment a few days ago, like, are you making fun of Radigan when you tell him he's going to corner the silver market with one call? It's like, no, I'm saying that as a legal disclaimer so that no one sends this to the CFTC and says the overtime guys are trying to corner the silver market with their one
OT Hunt LLC is trying to corner that silver market again
with a single futures contract.
It just goes to show that how big my bark is. If I just move one contract, it ripples through the entire global silver market. Yeah.
If that's the case, can you maybe please jump in? Because I have these 33 and a half calls that I'd really like to see.
All right. I'll do it first thing in the morning. First thing in the morning.
That's a mensch, Ilya.
I'm in. I'm ready. I'm good for it. I'm feeling easy.
Ilya, you think about gold
I'll
and
take
silver.
one over coffee tomorrow.
If you're in New York, and by the way, Ilya's going to be in New York in mid-July, so if you want to arrange a trip out of here, the three of us do a show together in person.
Yeah.
We can do it. We can do it.
Make it happen. Metals, it feels like, are following the opposite of yields to a certain extent, right? Did you notice today that yields and oil were kind of trading in lockstep together? As oil has a bigger pullback, bond yields are able to kind of back off their gains for the day.
Yeah.
The correlation between bonds and oil remains quite strong. If you're looking at a 5-day or 1 month, it's been oscillating, but not perfect, but close to near negative perfect or negative correlation, right? Bouncing between like negative 0.85 and negative 0.96. So is that really what we're on the watch out for here, Ilya? Like, is the bond yield story just an oil story that we're all thinking about tariffs and Trump and the Fed? And really, it's just that simple. It's an oil trade.
Yeah, but why the oil trade? So I think when you look at the bonds and the oil trade, they're not so much having a relationship in my mind where one affects the other. It's that they're both reflecting the same thing. And that looks like an expectation of weaker demand. And that expectation of weaker demand is ultimately a business cycle story. So I think in both of these, what you're seeing is the return of, wait a minute, is the economy going to turn? Because again, last year from May through December, the story is very simple. 58% of global GDP is three economies: the Eurozone, China, and the US. Of those three, only one had strong, positively trending growth, and that was the US. The Eurozone and China both decelerated at that same period of time. Global growth stands on one leg. That's it. You kick out that leg, there's nothing else. There's no safety net. And so when this is why I make such a big deal out of these PMI numbers. This is how these things start. The PMIs tend to show them first, especially the S&P Global PMIs, which have been much better the past several months than ISM. ISM's kind of jumped around a little, but this time they're in agreement. They're showing exactly the same thing. And the problem with what they're showing is that it's centered on the U.S. service sector, the one indispensable thing you can't lose.
The one thing that we can't lose is the U.S. service sector. The U.S. consumer is still in decent enough shape. Still seeing a rise in auto loan delinquencies, still seeing a rise in credit card delinquencies. Broadly speaking, though, people are holding it together, at least in the fourth quarter, as we saw for those Amazon earning results. They see a good deal of sales, but it's not necessarily coming from the AWS side. For those that missed it, we did read this off at the top of the hour to start the show, but earnings per share 186 versus 149 expected for Amazon. Their revenue was 187.79 billion versus 187.30 billion expected. The AWS revenues were just a touch softer, and their guidance was weaker. They are expecting sales for the forthcoming quarter, the first quarter, to be between 151 billion and 155.5 billion. According to consensus forecasts afforded by Bloomberg News, we were looking for 158.5 billion. So some weakness. We hit a low of 221.77 here. We have a share price back to 232 after hours. The S&P and the NASDAQ are holding up. Right, this is the highest closing hourly candle that we've seen in the NASDAQ this entire month so far, which we're only 6 days in, so I don't know if that's impressive. Tomorrow morning, Ilya, NFP game plan. Last time, it was a good number. I went out to go get car tires, and I said, good number. I'm going to go pay for these car tires by buying some zero DTE out of the money calls. And then the market didn't treat good news as good news. Is tomorrow a day where if the market sells off on a good headline figure, I can go and pay for those new tires and then the losses from my previous trade?
I think you have to be really careful with essentially interpreting whatever happens in the price action after NFP as related to the substance of NFP versus as related to the passing of NFP and in the clearing of event risk out of the market's way. I don't think the substance is going to matter very much unless you really deviate dramatically. I think what the markets want here, ultimately, and what probably helps them, if you want to talk about sort of uplifting risk sentiment, is a mildly weaker number. Because I think what the markets want is maybe some extra hope for lower yields and a final kind of push for Fed policy expectations now for next year, because this year is basically dead in the water at this point. If you don't get that, I think the worst of all possible outcomes for markets is something in line with expectations, because that just defaults them to where they were yesterday, and that's probably a risk-off conclusion. If you get a strong number, I think you're probably in good shape. I think the markets are going to cheer that.
Dylan, we're not going to see you until Monday. Do you have any final closing thoughts as we wind up this week on overtime?
I'm a little nervous about a week's jobs number, and I'm a little nervous about a weak economy. And I'm not that I don't know anything. I'm just saying I'm a little bit, I think it's one thing to tolerate a wild president with a strong economy, and it's a very different thing to deal with a wild president with a weak economy. So I'm a little nervous for evidence of weakness, just because I think it'll be much more dangerous, more risky than we want to deal with. So hopefully we'll get a strong labor market.
With that, overtime is out of time for this Thursday, February 6, 2025. We'll be back on Monday, same time, same place, as always, right after Last Call, 4 p.m. Eastern, 3 Central. Ilya and I will be back tomorrow for Last Call. We're hosting that, so be sure to check that out. Of course, after this, because it's an abbreviated version, the prediction trade is coming up next. Myself and Jeff Joseph, we sit down with John Rothschild, a sports handicapper, wrote the book on it, literally. He's working on his third one right now. Let's talk about the Super Bowl. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. See you after the break.
Breath for U.S. jobs data. It's only right. It's the first Friday of the month directly in front of us. And this is when the markets get the official report that so much of their thinking about the U.S. economy and that, of course, Fed monetary policy is going to hinge. So as we consider what is going on here, we, of course, have to take a look at what is expected of the data and then how it might actually drive markets as we go. So what we'll do here is break down that here on Macro Money. As ever, I'm Ilya Spivak, head of global macro here at tastylive, and then hopefully arrive at some sort of a trade implication at the end of our analysis, because indeed it looks like something of a change is developing in markets, and we're going to try to put our finger on what that is and how this data may well alter what this data does for stocks, for bonds, for currencies. Let's begin here with a grounding in expectations. So 170,000 jobs expected to appear for the month of January. That would be a little bit of down step from the 256,000 in the prior month, but certainly not catastrophically so. We can see the overall setup here is still well within recent ranges. As we take a look at what the labor market has done over recent months, I think we can quite clearly see we've sort of anchored into a range going all the way back to the beginning of last year, where U.S. job creation really hasn't made a meaningful break one way or another. We kind of cooled from the middle of 2021 into this range and have been sort of oscillating without much movement. A similar story expected from the unemployment rate. The monthly reading from last go around at 4.1% expected to hold steady here. And indeed, if we look at the way that U.S. economic data has tended to perform recently compared with expectations, the argument seems to be toward a slight positive bias on this Citigroup Economic Surprise Index that measures outcomes not in absolute terms, but relative to forecasts and scales them to the volatility that the releases generate when they come out. What we find is 0 is neutral. So this is where expectations and realized results match. We're a little bit above that, so the tendency is gently toward outperformance, but we're very, very close to 0. And so the overall sort of sense here is a tendency to be within striking distance of expectations, relatively close. And indeed, in so much as the ADP report, the private sector estimate of payrolls, isn't usually a very good indicator for what official figures will show, it does give us a preliminary view that suggests relative stability. The number earlier this week came out a little bit better than expected, 183,000 private sector jobs created versus 150,000 that the analysts had on their bingo card. But nevertheless, the overall story, very little changed. 30,000 jobs difference for the size of an economy like the U.S., not really a huge amount of deviation. And indeed, the general story here, that of relatively stable job creation all through last year at least, is about what you would expect. In fact, you can see here a very similar story on the official reading, even if the aggregate figures are a little bit different. The same thing comes from the Institute of Supply Management's numbers published earlier this week. We got updates on both service sector performance and manufacturing, and we can see here the service sector in particular showing steady employment growth. These numbers in the logic of PMIs, and this is, of course, just the employment component of that survey. Above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. The takeaway then here is the service sector, which employs the lion's share of workers in the U.S. and accounts for overwhelmingly most of economic output, something on the order of 75% of the economy is services, and even more of employment, close to 80% of employment is services. So that we have stability here tells us a story about the overall labor market, and we can see that that has very much offset the weakness that we'd see in manufacturing, where we can see employment has been contracting up until January, where it actually peaked its head above water again for the first time in a while. Not since early last year, late last year, did we see a little bit of a sliver of positive manufacturing sector growth. And it looks like in January we managed to somewhat arrest the preceding weakness, at least a little bit. So all of this seems to point to a relatively stable labor market, and the likelihood that the numbers that we're going to get out of the official figures probably endorses that view continuing. So, what's there to trade here? As ever, the markets operate in a way where it is the deviation of reality from expectations that drives volatility. That's what actually motivates investors to go and change allocations, to trade this or that differently than they had exposure to it before, when they realize that reality isn't what they thought and they have to go rebalance portfolios accordingly. This seems to say that the labor market is going to be relatively steady. And indeed, to the extent that this data, and really any U.S. economic data, is an input into the Fed policy calculus, that policy calculus has been relatively steady. Consider all of the fireworks we'd see episodically, just even over recent weeks, around the unveiling of DeepSeek's AI model from China that purports to rival U.S. offerings, but at a much lower cost to train comparable models. Consider the here today, gone tomorrow U.S. tariffs saga at the start of this week, where the Trump administration moved to levy tariffs against Canada, Mexico, and China, and within 24 hours, only the Chinese tariffs were left. So the share of macro volatility here and just episodic out of left field event risk has been, let us say, not negligible. But nevertheless, we can see here from Fed policy expectations, we've not gone very far. Markets now baking in 44 basis points in rate cuts for this year. That's almost exactly in line with the Fed's own prognostication from December, 50 basis points expected there. And really the divergences for next year. Markets are at 21 basis points, so not even quite at one cut, although that one cut is pretty close to being baked in, just 4 basis points off. But the Fed had 50. So this is where there is a little bit more of a departure. In cumulative stimulus between this year and next, the markets are at 64 basis points and the Fed is at 100. So there is a non-negligible difference there in sum of close to 2 rate cuts. So perhaps the state of steady numbers here is coming at a time when the expectations for this year are relatively anchored. They've been so impervious to event risk that the markets don't seem to be of a mind to speculate there. And maybe that then puts the spotlight on next year. Because, again, if we take a look at near-term policy expectations, we can see not only have they been remarkably steady recently, they've been remarkably steady since November. This was the Fed's big dovish outing in September here, and we can see by November, as the markets start to reprice expectations to say the Fed's more dovish inclinations don't make much sense when you consider that the U.S. economy by then is heating up after a few months of slowing. Moreover, you have the election pass, and it passes with obviously a victory for President Trump, whose economic platform is thought to be generally inflationary, be it tax cuts and deregulation that ostensibly boost growth and thereby drive up inflation. Growth and inflation tend to walk hand in hand. But also the possibility of tariffs and of some sort of a labor market disrupting deportation campaign of migrants that would purport higher taxes on imported goods. That's inflation. And likewise, a higher cost of labor. That, of course, is a more expensive input into almost everything, and so higher end prices. With that, it stops to make sense that the Fed was quite as dovish as they were in September, and by November already the markets have made the switch. We can see here that thereafter, the subsequent meeting in December where the Fed makes the switch official, endorses it with their own forecasts, that's already barely moved from where we were already by November. And indeed, the most recent numbers here, following a Fed policy announcement just earlier this month, almost unchanged. Very steady here still. So already as of November, near-term Fed policy expectations, at least as far as the markets were concerned, seemed fairly well established. Stock markets have seemingly echoed as much. Note that for all of the gapping and the shenanigans with DeepSeek and the tariffs and this and that, what we've found is that since early December, the bellwether S&P 500 has gone basically nowhere. It's been stuck in essentially a 6% range. And while we've seen these sell-offs, this is the DeepSeek sell-off, this is the tariff sell-off earlier this week, while these gaps have closed, or at least tried to close, we've also not exactly shrugged off the bad news, else we'd be rallying. We'd be breaking these highs. But the market still seems somewhat circumspect here. It's not convinced, apparently, because we are still stuck in this range. And maybe the stasis of policy expectations, at least at the near term, has something to say about that. But where interest rates would likely be even more front of mind, that's interestingly on the move. And it's at the long end of the curve. That this is the continuous contract for the 30-year long bond. And what we see here is a significant rebound. And if we were to look at the benchmark 10-year, it's much the same story. Now, in line with relatively steady Fed policy expectations, the 2-year, so the front end of the curve, very steady, not really going very far at all. But interest rates are absolutely on the move at the longer end maturities, and more interestingly still, they are now at the lowest level in 8 weeks. Yields, of course, move inversely of bonds. So when we see this bond rally hit an 8-week high, the flip side of that is an 8-week low on longer end yields. Moreover, the bulk of this move has happened on just 2 days. This one, that's January the 15th, and this one, that's yesterday. This right here is that DeepSeek news that gives us a bit of a pop that we then stop to digest. But it's really this move here and this one that do the heavy lifting. And tellingly, those are both economic data days. The first, the US CPI report that gives us slightly lower core inflation than expected. We can see here the headline comes in line with expectations, and that's to be expected as we get easing influence on energy, as the rebasing of these energy contributions becomes less negative. We can see core inflation comes up, or headline inflation, excuse me, comes up a little bit. Core here has been steady, reflecting the conditions of the core services contribution here, which itself has been fairly steady and which has been, of course, the focal point for the Fed. But the aggregate numbers are a little bit softer, 3.2 versus 3.3% expected. So that's one jump in bonds and one lurch lower in yields. And the second come just yesterday with disappointing U.S. PMI data that showed us the slowest U.S. economic growth in 12 months. Worryingly, that came not as you saw a little bit of a perking up in manufacturing, again, coming out of contraction territory and actually giving us a positive result at 51.2, but a slowdown in the service sector, which had been, of course, the main engine powering this strength all of last year. Moreover, even though employment was relatively steady in the parallel ISM PMI numbers, the actual headlines were also weaker in aggregate because of services. Again, a slight beat on manufacturing, but the meat of the economy is services, and here there was a disappointment. Of course, putting this in context by component, yes, indeed, as we saw earlier, employment relatively steady, but the price component as a implied demand gauge lower, and perhaps more worryingly still, new orders significantly lower and approaching standstill. Now, this, of course, is worrying in a much broader sense, because what this implies is that this very state of affairs is starting to show some wear and tear. Now, to see that most inflation here sits in the service sector implies that most of the demand is there, that the abiding driver of the U.S. economy is the service sector. Note, there is virtually nothing comparable on the goods side. That inflation is fractionally negative. So there really is no major growth in goods demand. It seems to all still be in services, and indeed, that's how this slowdown in services gives you the lurch lower in the overall composite. Now, with that, the global aggregate, this is now global PMI, as we can see, looks very much like its US version. Relatively steady from mid last year until we get this lurch lower. And that really speaks to just how sensitive overall global growth is to this single point of failure, the US service sector. And that, of course, is because global growth primarily is made up of just three economies: the US, the Eurozone, and China. That's 58% of global GDP. The remaining 42% are mainly vendors to the former three. Think Canada and Mexico, appropriately enough for the US, Central and Eastern Europe, Nordic Europe for the Eurozone, commodity producers in Asia, in Latin America, in Africa as well for China. So it's only right that global aggregates start to break down as the U.S. service sector breaks down, when we consider that since the middle of last year, it's been the U.S. shouldering all of the burden on growth. These are composite PMIs that we just got updated this week, showing what happened with overall economic activity growth in China and the euro area over the same period. And now in January, we can see for China, it's slowdown. For the euro area, it's slowdown. And they've only just barely managed to return to growth here, only fractionally at or above 50 here. But the U.S., that's where the strength has been. That has been the global economy. And it's this lurch here, most recently, that then powers what we see here. Things are steady, and then down we go. What does all of this mean in aggregate? Well, if the bond market is willing to do this, while Fed policy expectations remain relatively steady, as we see here, then the story really isn't about what we are going to get this year. What that is seems pretty well anchored in place at this point. And that the bond market is doing these things around slightly soft-footed economic data at first and meaningfully soft-footed economic data yesterday next, all that seems to suggest that what is emerging here is more of a cyclical concern, a sign that maybe the U.S. economy is starting to cool finally. And while that may not alter Fed policy expectations immediately, it may very well start to alter the pricing for next year where, as we've just mentioned, the markets are lighter than the Fed. The Fed is at 50 basis points. The markets have only baked in 21. What does all this mean for the jobs report? Well, if the tendency is for this to come out broadly in line with expectations, then the report might be more impactful in its passing than in its substance. If we get a number or a set of numbers that's relatively close to expectations, as we might expect looking at this, then we are looking at a situation that's more of a roadblock overcome than anything that ought to alter the course of sentiment. And then the markets are free to do that which they have been doing, near-term Fed policy expectations notwithstanding. That, of course, is this. So once the numbers pass, it may very well be that bonds just continue to move higher because a roadblock has been pushed out of their way. Moreover, the stasis in stock markets may start to give way on the downside if, in fact, what the markets are starting to position themselves for is cyclical cooling. And of course, whether that breaks the larger range here from early December and finally gives these markets some directional conviction after now almost 2.5 months idling, having broken the uptrend from August, that we'll have to see. And that's macro money for today. We're here Monday through Thursday, right after Overtime, show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. That's tomorrow right after the jobs data. We'll break it down. I am likewise on with Victor Jones for the Price of Truth on Tuesdays. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Take care.
What is going on, everybody, and welcome back to the Bad Taste segment. We got Gus and I today. We're going to do a little tour to market, break down some of these after-hours movers for earnings. We got things like Amazon we'll check out, and then get into some of the fun games that we do towards the end. But before we get into that, Gus, my guy, how we doing today?
Man, I'm doing well. It was a good day of trading. It was one of these days where if you basically just go long anything, it'll work out. I caught a nice gap on Eli Lilly this morning. Picked up added a little bit of Ethereum. Crypto lacking a little bit. Feel like that's going to come back. So yeah, I'm happy. It's been a good day.
What are your no financials? What are your thoughts on XRP?
XRP, man, I used to be really, really high on Ripple. I actually probably still have a few $100s of it laying around in a Coinbase somewhere. And it's done well. I was buying back in like 2019, 2020. I'm admittedly not well versed enough on crypto to really have a justified opinion on how it fits into the wider space and the blockchain and all that good stuff. But from a purely financial stock sort of perspective, I'm a fan.
I got you. I love it. Well, we can't not talk about what we're about to bring up next. Over or under on the Chiefs? Are you an Eagles fan right now? Is what we all want to know in chat, Gus.
Yes, of course. I'm a Chiefs bettor and I am an Eagles fan at the same time. I'm not going to fade. I'm not going to fade Mahomes in this spot with all the narratives.
You're not going to fade the refs.
Well, yeah, you got to fade Mahomes, you got to fade the refs, you got to fade Taylor Swift. It's a lot of people to fade. I'll tell you where my money is on Travis Kelce proposing if they win this game. I think that's what's going to happen.
Really? Yeah. Is there a poly market for that setup?
Oh, there might be. That's a good thought.
Yeah, let us know, because if we have an extra few minutes, maybe we can just hop into poly market. Just also check out what the standings is looking like for the Chiefs, and they do have it.
Yeah, 5% chance is what the market has it at. It's been as high as like 20.
Okay, if you don't mind leaving that up, and then we can get into it here in a minute when we have a few minutes. I'm curious to see what that's saying. But Lone, what's going on? Lone says he's sick and tired of the BS with Swift. Well, don't get too tired yet, because we still got a little bit more coming, especially this Sunday with the Super Bowl. There's no way she's not going to be in some ads, first of all. And then when you're watching the game, we're going to always get those shots of her up in there. So, Lone, you got some more Swift to digest. But anyways, what's been going on in the market? We got Amazon earnings after the bell today. And I mean, as you can see right away, very volatile to the downside, upside. I remember I was watching this live. It's kind of funny. Sometimes you'll just be sitting at the computer and you have the chart up, and then you just see like a 50-point drop on one of the underlines. You're like, oh yeah, I forget there's earnings. But I did say, I think last year I wasn't going to be doing too much earnings. It was kind of one of my New Year's resolutions along with Julie. It's like, what? Earnings, we'll put that off to the side. We'll watch it from the sidelines. But this year, Dr. Jim has gotten me into a couple earnings, Gus, and they both went in my favor, which was last week, Microsoft and Meta. So I was like, you know what, Dr. Jim, I like statistics, and so far we're 2 for 2 on the year, so I'm going to go ahead and get into Amazon. We did an expected move butterfly in Amazon to the long side. And as you can see how that's playing out, not too hot right now. So we'll see how the market opens up tomorrow. Other than that, bro, I have that Amazon position. I have the SPY position. I sold a 43 days till expiration out of the money SPY call yesterday, I believe I put it on. That's down a little bit on the day today. We had a little bit of a rally today, especially into the close. Did that one just to express my opinion in a longer term duration. And then I also have the QQQ position on. So this one's looking like an iron condor right now. I originally sold the call spread to the upside. I sold the call spread to get some short delta on, and then we had sold off pretty significantly the next day. So then I legged into the iron condor, sold the put spread. So right now, we're up a little bit on it. I mean, I guess, I could have taken off the call spread when we had really sold off, because again, this one expires by the end of the week. But instead, I decided to leg into the iron condor. So far, if hopefully we can get a sell-off tomorrow or some type of downwards move, and then I can profit on both sides of those trades. But if not, I think the out of the money calls, or the out of the money put spread that I sold is going to finance, a little bit of that call spread that I sold, because I might take a hit on that that side of things. But other than that, that's what I got in here. We have Amazon. After the bell, again, I sold the 250 strikes, bought the 240, and then bought the 260. I've never been the biggest fan of butterflies, but Dr. Jim always nudges me to apply some of those butterflies whenever we're trading around earnings. But that's all the action I got going on over here, brother. I mean, I know we have Lulu you had mentioned as well, but is there anything else that's kind of been top of mind, or any you got any thoughts on any of these positions, or where are you at right now?
Yeah, Andrew in chat saying Dr. Jim changed his mind on Amazon today and put a bearish butterfly on. So you gotta give him some grief that he didn't say anything to you.
This man baited me in there. Yeah, he probably sold the butterfly that I bought. All right.
He probably did. Yeah, I can attest. A lot of people around the office were very high on Amazon today. Nick as well. I know he was none too pleased on his way out the door. I like your QQQ, and I think that's a great story and a great lesson in position management and being able to take some risk off. That's smart. I don't have anything too crazy going on today. Christopher Vecchio got me in on this IQV. I don't even know if he realizes he did it. It's just trickled down through the chain of command that I've wound up on this IQV. So what's up?
What's going on over here?
IQV, it's I really can't. Vecchio could do a much better job of explaining it. Essentially, he thinks that this is the next big thing in AI. Is where we're
AI
related.
IQV.
I don't mean to speak for the man. I would let him defend himself on that one, because, like I said, it's a game of telephone for this to even get to me. But I am liking this IQV. I picked up 10 shares yesterday. Just a very normal, very brain dead play. Just grab some shares, but that's paying off well for me.
Yesterday, because we had pretty big gap up overnight. So yeah.
Yeah, yesterday. So that's paid me well today. And then I also caught Eli Lilly. There was a nice gap that formed there this morning after earnings. It felt oversold, and so I grabbed some of that like right before there's a big candle on the 1 hour. But yeah, took a gap down after earnings. High on Eli Lilly in general as well. I'm a major bull on all of these pharmaceutical companies with the weight loss drugs. I think that these weight loss drugs are going to continue to rise in prominence. America is only getting fatter. Is my line of logic. So
Hey, you're from Texas. Bigger is better. Yeah.
Yeah, everything's bigger in Texas. Ask Charles Barkley about San Antonio. You know.
Hey, in terms of, you ever think the weight loss supplements or whatever it has to do with your health, I don't think that industry is ever going to go away, huh? I feel like there's always something in each decade where it's very attractive that's in relation to weight loss, the way you look, and just overall nutrition. So it kind of just seems like that's always going to be one of those industries that's always going to make some type of underlying pop off. But
for sure, yeah, and the efficacy of these things is only moving in the right direction as well. So yeah, I'm high on it. Legalize steroids. Let's get that going.
As long as it's legal.
Legalize trend. I'm buying that stock.
Legalize trend. Yo, you ever has? Never mind.
I haven't. If that was your question, I have some friends at the gym who are questionable, but I have not.
Yeah. Look, I'm not going to take that. I think I'm going to stay natty. I'm going to stay natty, but man, it would be nice to.
Oh, it's tempting sometimes for sure. Especially, I'm well past all the newbie gains and everything now. It's really hard to gain a pound of muscle. So, I would. Some stimulants would be great.
No, I hear you completely on that. Other than that, the volatility index, really not too much of a change heading into this year. I mean, it's kind of been the same story with volatility, but if I can type this in correctly, it's kind of been the same story. We'll see whenever we get any type of significant pullback in the market, but it even just seems like any type of, the gap down over the weekend, whenever there was some of the tariff talk originally, I think that occurred on Saturday, and then it had the market gap down opening into Monday. We saw a little bit of a spike in volatility, but really nothing too significant. Maybe I know we have the 30-day pause. Maybe when things come to fruition with that, and if those do really materialize, maybe we actually get some type of expansion in volatility. But until then, it's kind of been the same story since the beginning of this year. So just been keeping an eye on that. I know IWM is another one I'm going to be keeping an eye on as we head into the rest of the year. Volatility and implied volatility is just a little bit more attractive on IWM. I'm really such a QQQ SPY kind of guy. Like, those are my ETFs. Those are the indices I really like to focus on. But the premium is attractive in IWM. So I'm going to keep an eye on that. But other than that, I know we can check out oil. quickly, pretty big sell-off in oil. Oil is one of those very sporadic kind of products. I don't know if oil is one that you like to get into at all, but I haven't taken part in oil, excuse me, in some time. But
I don't do commodities in general, and highest on that list is oil. Oil is it's a whole scary world that I do not engage with. Oil and natural gas both. I respect you.
So energy,
if you're
I'm
a natural
good.
gas trader out there, I respect you, because holy cow.
No, 100%. I know sometimes when I did get involved with oil, I think one of the last times I was really actively trading oil might have been around the time when, excuse me, when a barrel of oil went negative. So it's like, of course, our experience trading some of these products was whenever we had some anomalies within that specific sector or market.
I tried to convince my friends to buy a pallet of oil barrels. They wouldn't listen to me.
Bro, imagine though, oil was dumping around zero. Oh, I know. Let's just store this oil in our crib. But imagine
in the garage. This little crew in the garage never hurt nobody.
Never hurt nobody. Imagine oil selling off around $1, going to zero, and then I could just imagine the margin calls that some people might have had whenever oil did go to below zero. I mean, that's something that would have caught me off guard, and it's one of those things I think I'm gonna have to learn from other people's mistakes, because I could see myself seeing oil going down near $0 a barrel and absolutely oversizing on that, not expecting oil or barrels of oil to go negative. But that's one thing that's always kind of replayed in my mind.
Well, yeah, you certainly, as a trader, are wired to think that if you're playing things to the upside, that there is contained downside risk. So yeah, all of a sudden when something goes completely negative, yeah, that would throw me off too.
Yeah, no, completely. Other than that, though, brother, that's pretty much what's been going on in the market. We have Amazon earnings. We can quickly just check to see which other earnings we can expect coming up, and then we can get into our Connect trade. Have you played that one before?
I haven't, no.
It's actually pretty fun. So I know you're familiar with Tradle.
Yes. It's like Connections. I got a brief look at it before we start.
Oh, what is Connections? Yeah, go ahead.
Oh yeah, Connections. It's one of the New York Times games. People are big into those. They I think they started it. I mean, the concept has been around for a while. But it's you get 16 things that are randomly assorted, and you have to make groups of 4.
And is it about specific countries as well? We might be talking about the same thing.
No, it'll be it can be anything in the world, and they try to get you. Like, they might throw crimson in there, and then there's also 3 other cells that say red and pink and fuchsia, and you think that it's shades of red, but then crimson actually goes with football teams or something like that. It's meant to confuse you.
No, makes sense. We'll hop into that here in a moment. Just looking at Rivian before we do that. I've been keeping an eye on things like Tesla, GM, Ford Motors. Just again, if the tariff talk materializes, I know we get a lot of automotive parts and things of the sort from Canada. So been looking at some of these underlyings and sectors and industries that might be affected whenever those go into place. But lastly, before we do shift gears, any thoughts on Rivian? I know, again, Rivian's one of those EV companies where I see a lot more of their vehicles around, but I haven't been keeping up too much with Rivian. Is that something that's actually going to be able to compete in the EV market, or is it just the talk of the town?
It's looking like it. I certainly was in the camp of just thinking it was this trendy stock there for a little while that might not take off. Like
that's what it felt like.
Nikola, something like that, which of course that ended in scandal. But I didn't necessarily think that. But I am starting to be a buyer. I don't hold any Rivian myself. Obviously Tesla is still just so dominant in that space. But like you said, you notice. I mean, I'm seeing Rivians pop up left and right. I don't even think a thing of it or point them out when I see them anymore. And there was a time when it was a unique thing. They're super luxurious, and I think that Tesla is going to. They are expensive, and I think that Tesla is taking the angle of trying to be the Ford of electric vehicles. First to market, very affordable to the average consumer, all that good stuff. And so when you talk about Rivian, I feel like there's a space in the market for that, especially as Tesla's production ups and they become cheaper and cheaper for people to buy. I think luxury EVs are wide open, and I think Rivian's here to take it.
Yeah, no, that's a great point. I mean, if you're a believer in Rivian, it's an absolute steal right now. Hey, just my opinion, but it's been getting absolutely beaten down over the past few years. But other than that, we can go ahead and shift gears here. I believe it is Connect. Let me know if that looks good on your end.
I'm good here.
Connect trade. So this is not what you were previously speaking about a moment ago.
No, it's not, but it is. It looks, it's conceptually the same.
Okay. Awesome. If anybody is new to this, it is where we find groups of 4 products that where they share something in common, and it'll give us a little bit of a hint if we paired one correctly, and if we need to pair another one, if we're missing one or if we're missing 2. So, if you're familiar with this segment, you know exactly what we're about to get into. But do we have any we want to start off with, Gus? Any of these kind of catching your eye right off the bat? We got. Okay.
Well, I don't know. There is really nothing super jumping out to me. I want to start with Chile, but I don't see anything that like jumps out to me as being distinctly Chilean. I was gonna say mollusks, but we have North Mariana Islands, which is kind of a wild card in here.
Right.
I'm agreeing with the pairing you got going on here.
Particle board, recovery paper, right? Kind of tomato a little bit.
Sure, yeah. Yeah, I feel like we need to just throw in a guess and try to get some information here.
Otherwise, containers. We'll go. Okay, 2 more. What kind of relates? We'll go. You know what? We'll go mollusks just cause.
Sure. Throw a wild card in there.
Yeah, we'll just go ahead and do that, and then
we can go. Want to go nitrites and nitrates?
Yeah, let's do it. That I just got PTSD from.
Yeah, I did too.
Don't say that out loud.
I saw that and I had to. My eyes darted all over the place. I was like, wait.
Okay. All right. So we have particle board. That's in its own category, so it's not with recovered paper. But at least we know that we have recovered paper and mollusks go together. I would have not guessed that one. And then we have nitrites, nitrites and nitrates, and that is within its own category as well. So we have recovered paper and mollusks. We can choose a new 4 and kind of go from there if we want to do something like that to be able to pair these up. We could,
wider data.
Unless we want to do recovered paper or mollusks.
No, I agree. I think especially because it kind of tells us the groupings. Yeah, we might as well just try to get more data.
Okay.
All right. Let's try fabrics and plant foliage. And
fabrics.
Yeah, the pile fabric.
Okay.
And then
let's see. There we go.
And if we're doing the plant foliage, let's throw the fertilizers in there, I think.
Fertilizers. Where is fertilizer? Over here. There we go.
Yeah.
Recovered paper. Is that what you had said?
No, I said the plant foliage. It's on the left of them there.
There we go. We got 3 here. Throw 1 more in there.
Well, I don't know. I feel like nitrites go with fertilizer. Not really a big farm guy. Somebody in the comments correct me if I'm wrong on that.
Not a big farm. You gotta be. You're from Texas.
I know the farm people. I am not.
I know of the farm people. Where is that?
On the nitrates and nitrites on the right.
Oh, there you go. We'll just group it in there.
See if we can get somewhere here.
Awesome. All right, so we pretty much paired not a single one on that one. So we got pile fabric. That goes with recovered paper and mollusks. Potassic fertilizers, plant foliage, nitrites, and nitrates are also in its own category as well.
Okay, so we got 3 yellows.
We have 3 yellows, 2 blues. Is that green? I'm colorblind. I think that's green though.
It is green, yeah. I don't even know what country the yellow is. Anybody have any ideas? Pile fabric, recovered paper, mollusks, how those could possibly go together?
Honestly, do we even need to know the country?
Well, I mean, you don't, but like it would maybe help try to figure out the 4th if I could establish which one that was.
Pile fabric. Oh, not that one. Recovered paper, piled fabric, and mollusks. We haven't done iron gas containers. We haven't done beer, rapeseed oil, gravel and crushed stone, carbonates. Carbonates and nitrates got to go together.
You would think.
That's what I would think. Let's
go for those 2. Throw paint in there. The other paints on the left.
Other paints. What else would go with paints? We could do rapeseed oil, halogens.
Sure, either one.
Go either one of those. Go here, see what we get. So that's green. So we're missing 1 out of the green. So we were pretty spot on there. Yeah, nitrates, nitrates, carbonates.
Okay, are there 4 we haven't done? We haven't done whey, molybdenum.
Oh, we only have 3 lives left. Okay, makes sense.
All right.
We'll go.
Should we try 4 that we haven't tried, or should we try to play this game?
We should do 4 we haven't tried. You're completely right.
All right, let's go whey and milk products. The top left, or I tried to pronounce it once.
Potassic?
No, the top left. What is that?
Oh,
molybdenum or?
Yeah, that's all you. That's all you.
Yeah. My apologies to the audience for having to listen to me say that.
We haven't done you.
And then gravel. We haven't done gravel.
No. All right, this will help us for the next 2.
Surely.
Yeah.
Okay, we got 3 blues. We have all 4 reds.
We have all 4 reds.
Yeah, beer, gravel, other plants, or other paints, rather, plant foliage.
And plant foliage.
Second row, 3 up.
Wow, that was a mission to get that one row. Particle board. Let's go blue.
I like blue, yeah.
Particle board, potassic fertilizers, and then milk. This is tough. Yeah, this is a tough one.
The fertilizers and the milk are giving fields. You got farmland, right. You got fertilizers, you got cows. So
I see the vision.
I lean Belarus or maybe Chile. Maybe the oil. That's something to grow. Maybe.
Recovered. Oh, rapeseed oil. We could do that one. That one's a good one because we haven't.
Have we tried it yet?
We haven't even. I don't believe we've tried. I'm feeling good about this, so we're gonna go ahead and send it. There we go.
Hey.
There we go. There we go. All right, we'll go.
We got yellows going.
Paper. Yeah, let's knock this out.
Mollusks and pile fabric. And then what goes with these?
It's got to be halogens. If we haven't done halogens yet, I don't think we've clicked on halogens.
I thought we. Oh, maybe we didn't.
It's either halogens or.
Halogens is green.
Oh, okay, it's green. What about iron gas containers?
I don't think we've done iron gas containers.
It may be this.
I think because we know that halogens go with the nitrates. Have we tried the carbonates? We have. Those are green. Yeah. Also, yeah, I'm liking this.
Iron gas containers. Full send?
Yep.
Any objections?
I like it.
All in favor? All right.
Yeah. Yeah, anybody?
Uh-oh. Oh, there. I didn't click. I didn't click it. I thought I clicked submit. I was waiting to see if we got our. Never mind. There we go. There we go. Easy work.
Hey.
There we go. Buzzer beater at the bell.
All right.
There we go. Other than that, brother, we'll see what we get heading into tomorrow. I think tomorrow, this morning we had initial jobless claims, but there's really not too many significant red folder news top of mind. I'm just going to be looking out for a lot of these earnings. Yeah, we got wrecked. Sorry.
We have the Trump administration back and the volatility that comes with it. So you can just any day in the middle of the day, all of a sudden have some giant catalyst.
On the extra monitor, I make sure I have a news feed going 24/7 nowadays, just in case, because things are turning on a dime. So.
Oh yeah, he'll hop on that podium anytime and just change the whole landscape.
The entire sentiment of the market. But no, that's gonna pretty much do it for today's Bad Taste segment. Is there anything else you wanna leave off on, Gus?
No additions. Always pleasure streaming with you. And for fans of the segment, I'll be around a lot more moving forward, it looks like.
Absolutely. So that's gonna pretty much wrap it up today. Thanks for taking the time to hang out with us today. We'll see what we get in the market. We'll manage these positions as we should throughout the rest of the week. We'll see how Amazon ends up by morning. Things can change, but I will have those trades posted on the trader page, and we'll see how those kind of turn out. Great seeing you guys, and we'll catch you guys next time. Peace.
Everyone have a great rest of your day.
Yeah, it is Thursday, February 6th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, Miss Molly, good golly, Miss Molly, are there a lot of incentives and a lot of people trying to govern the world. So we will sift through it all here in just a bit. But before we do, we should say what's up to the people. Shout out to everybody watching on tastylive.com, as well as Tasty Trade desktop and mobile applications. But if you want to be part of this crew over here, this screen name and comments, both appropriate and otherwise, there's only one place to do it, and that's on the evil Google YouTubes. So head on over there on your interwebs and find the Tasty Live channel, jump in the chat, and move those phalanges and metacarpals. Why? Because the more active you are in chat, the more they're going to put this 12-hour live stream in front of people. In front of people. I don't know. I don't know if it gets a premium placement in the Google algorithm, 12-hour blocks of streams. But it will, we'll spoof the Google algorithm into putting this in front of as many people as possible. Speaking of the people, we should say what's up to the people. What's up, chat? Are you there? I think mine's disconnected probably. What's going on, everybody out there? As soon as your names pop up, I'll start shouting you out. There you are. I knew you were in here. I don't know why it does that sometimes. Google. What's up, Lone? Andrew, Todd, Brian Watson. Brian Watson, let me shout you out, my friend, is the GOAT when it comes to tags. I'm telling you should graduate from my stream, man. You should be over on Joe Rogan somewhere doing the timestamps because you are incredible. Katan, what's going on? Jared, so many. Absolute beginner, what's up, son? What's up, weird ass market? Amen to that. Amen to that, brother. Lucas, what's going on? What's up, everybody? Y'all have a Trump there in Singapore? Not really, man. They just Singapore's 60 some years in? You know, it's a baby. It's a teeny tiny baby. And for most of that, it was run by one person who just passed away. I think when I visited the first time in 2015, he passed away. So basically their version of George Washington led the country for a really long time. And they are on, the second or third leader since then? Third? And I don't know if I don't know if it's like a Trump situation. It's a democratic, kind of. It's an interesting system. I don't really know how to explain it. It's an interesting system, nonetheless. What's happening, baby? What happened to LNG today? I'll take a look at that in just a little bit. It was getting punched. What's going on, everybody? I was trying to, it's the same day for me. No, it's a different day for me, same day for you. I was on this morning with Tom Sosnoff for the morning show. Tony's out doing his thing on a well-deserved vacation, so I had the extreme pleasure of being able to join Tom this morning, and I thought they were trading heavy for most of the day. I think I was right and wrong, I suppose. The S&P 500 traded or finished in positive territory, up 1/3%. The NASDAQ up 0.5%, the outperformer on the day. A little pump fake this morning on the Russell outperforming the NASDAQ, or basically outperforming other majors. The Dow Jones, guess what, everybody? 30 basis points. 28 basis points if we're being specific on the low side. I feel like we're in a simulation. I also don't know what's up with my pattern recognition. Because am I crazy for picking that out? Are we not moving exactly 30 basis points in the Dow 95% of all sessions? That might not be, maybe 85. The Russell down 0.2% as well. So not a great day for the Dow, not a great day for the Russell. The NASDAQ did outperform. And as Scott Sheridan was on going through the top 10 or 15 symbols going through the system this morning, as he was spitting them out, I was typing them in one by one. And all the tech names he was mentioning, they were all positive on the day. And so some part of the back of my brain is going, uh-oh. if you're playing for a rollover, when all the constituents, some of the major constituents were positive, but the index itself, given the way it's jiggered, wasn't necessarily exhibiting the strength. It's only a matter of time before it catches up most of the time.